Morning, order please. This special meeting of the Joshua Basin Water District Board of Directors for May 22, 2025 is now in session at 9:06. Please join me in the Pledge of Allegiance. The flag is just here. I pledge allegiance to the flag
of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Determination of a quorum. General Manager Johnson, a roll call, please.
President Paul.
Present.
Vice President Doolittle.
Here.
Director Fick.
Here.
Director Short.
Here. And Director Jarlsberg is legitimately absent. So we have no request for remote participation. I assume. Yeah, okay, we have a quorum though. Do I hear a motion to approve this morning's agenda?
I'll motion that we approve the agenda.
I'll second.
Motion, all those in favor, say aye.
Aye.
Opposed, motion carried. Thank you, David. Public comment time. This designated time is for members of the public to provide comments on any district-related matter, whether appearing on the agenda or not. Under provision of the Brown Act, the board is prohibited from taking action on items not listed on the agenda. At the discretion of the board president, comments on a particular agendized item may be deferred until that item is heard. Is there a public comment?
Public comment.
Anything from people in TV land? Nothing. Manager Johnson, is there a written, electronic, or voice mail comment?
To my knowledge.
Thank you very much. Hearing nothing on all this, public comment time is now closed. Consent calendar. Consent calendar items are expected to be routine and non-controversial to be acted upon by the board at one time without discussion. If a board member would like to an item to be handled separately, it will be removed from the consent agenda for a separate action. We have one item on the consent calendar. It's the draft minutes from the special board meeting of May 1. Does anybody want to move this item from the consent calendar? Hearing none, is there a motion to approve the consent calendar?
I'll make the motion.
Second?
I'll second.
All those in favor say aye.
Aye.
Opposed? Hearing none, motion carried. And so there is no item 6. Item 7, discussion and action calendar. It's the today it's the March 2025 check register. Director of Finance Ann Roman, please.
Thank you. Good morning.
What a wonderful
We
day.
have the March 2025 check register today. This is
A Zoom meeting.
regular check register totals $367,380. The payroll register totals $2,730.34. Utility refunds amount to $1,688.01, and director stipends $3,125.34. There are a few items of interest that I'll mention as we go through page by page here. Start on page 9 of the agenda packet. The very first 2 transactions, account temps, I just wanted to mention there that we have an employee out on leave. That is
Pass a note to David, who's probably
temporary employee there. We
that
have on this page Amazon Capital Services with
offered on.
waterproof steel toe safety boots.
Yeah,
Engine
they
block
keep saying it's a
heater,
public.
a headlight restoration kit.
Comment, just
exhaust
go to
fluid,
chat. There's no
video
chat.
Conference camera, webcam, 4 office computer monitors, toner, printer paper, and a UPS battery backup with surge protection. On this page, we also have right out in the middle there, Octane Sales Company, meter reading software subscriptions. That's our annual subscription there for that meter. We have, Atkinson, Andelson, Lloyd, Rudd, and Romo, 2 months of legal bills there, and just pointing out, this question came up last time, we have labor legal and we have regular legal, so for 2 months there. We also have at the bottom, starting at the bottom, Babcock Laboratories with our sampling. Any questions on that page? Page 10. We have 3 CalPERS invoices. That's for 3 periods, employee and employer contributions. We also have on this page 4 in Maine with some inventory purchase, 50 3/4 ball valves and 43 3/4 check swing valves. We have Dunphy Power Services. This is down near the bottom with some generator repairs, replaced faulty fuel hoses and installed a new fuel filter housing. O-ring for generator 3, and for generator 4, they installed a new recovery coolant tank, block heater, fuel pump, and check valve. And for generator 5, evaluated repair needs for the pneumatic station transfer switch. And right above that, sorry, I skipped this one, Dudek with some work on the High Desert Medical Center wastewater treatment plant, which is all reimbursable to the district. And at the very bottom, we have 2 invoices for 2 months of Ide Bailey, which does some accounting consulting for us. They actually work on big bricks most of the time, in addition to offering some assistance with some GASB work. Any questions on that page? Okay, page 11. We have Granite Construction near the top with some cold mix for asphalt repair. Hack or Hatch, I never know how to pronounce this. They provide chlorine, actually this was a chlorine testing tool, a DPD-free chlorine reagent, a Swift test dispenser, a specialized tool designed for efficient and accurate testing of free chlorine levels in water samples. We also have Home Depot on this page with some stretcher bars for fence repairs, blue and yellow safety spray paint, and a 12-gallon wet dry vacuum. We have Napa, about a third of the way from the bottom, with oil filters, air filters, brake pads, etc. And I wanted to mention on this page also Paylocity. We have a $500 invoice that we paid to Paylocity, which is our prior payroll processing company, and that is for access, extended access to the data from when we were using that service.
You're coming and going, don't
Yeah, it's if we want to have that history, it's the easiest.
Oh, yeah.
Fortunately, it's not a terribly expensive amount, so I think it's worth that for the convenience of not having to flip through a bunch of paper reports.
Yeah.
Okay, any questions for page 11? All right, page 12, we have at the very top Pro Security did some work with 7 new wide angle dome cameras for the shop and office. We also have planning company troubleshooting generator 5 at the pneumatic station. And our usual Southern California Edison bills in pretty average amounts there near the bottom. Any questions?
So explain to me, please, the release of liens, like when do we do that? These are liens, I guess, against outstanding bills from ratepayers.
Correct.
And so when do we decide to do this? Why don't they stay on the books forever? Not that I want to punish people forever, but.
Underpaid. So.
Oh, that's why. Oh, that's all it is. Okay.
And release the lien. And although there is not, I was actually just looking at this morning. There's not a fee for us as a government agency for filing the lien, but there is a fee to release the lien.
Oh, really?
Yeah, that's kind of interesting. I'm not sure why that is, but that's why. When you see that, you'll know it's related to a lien that's been paid.
Thank you.
Yeah. Any other questions on page 12? Page 13, we have at the very top, Tyler Technologies with our annual subscription. This is our utility billing and financial software. It's our main software, aside from GeoViewer. And we had a couple of credits there for some modules that we decided not to continue using. And so 40,000 for an annual subscription there. We also have our credit cards on this page, US Bank Corporate, starting with mine, which had the fees on it for the Paycom payroll implementation. And that was, if you recall, that was negotiated down quite a bit. I don't know the exact figures, but I want to say from about 5,000 to 1,500-ish. And then we had on my credit card a GFOA compensated absences webinar, and that's related to GASB 101, which is coming up this year, the implementation of which is coming up this year. We also have Dan's credit card with waterproof steel toe safety boots, mineral oil for well maintenance, and a set of pliers with a 3-piece toolkit. David's credit card, including monthly fee for climate controlled indoor storage, monthly Adobe subscriptions, customer door hangers, fiber optic safety markers, and confined space signage. And then Sarah's credit card included CSDA annual conference registration for Director Jarlsberg, Vice President Doolittle, and Sarah, General Manager Johnson, and a background check. Also an Evernote annual subscription business cards for directors and staff, a WWA cross-connection course for 2 employees, and water treatment basics course for 1 employee. A lot of educational things on that month credit card. And then at the very bottom, we have, oh, I skipped over. I wanted to mention USDA rural development right under the middle there with the CMM interest payment. So Copper Mountain Mesa interest payment. And at the very bottom, wire fire fabrication, which was the final payment for the windbreak structures and sign at the office. So, questions on page 13?
Yeah, I just have a question regarding so the Tyler Technologies, that's for, what's the name of the software? Is that the,
It's called, well, it was called Encode.
okay, so it's
It's
the,
now called ERP 10.
okay.
But they changed the name in the last year.
Remember
or so. No, I know.
Yeah,
We've had it-
Encode,
it was
right.
Encode for,
Okay.
since the beginning of times.
And that's the one that we reviewed, isn't it?
It
Yeah,
is.
okay. All right, and then regarding the the wire fire fabrication, wow, that's so expensive, but are we gonna have, when you guys redo the front bed, you know, and landscape or whatever, and clean that up, are we gonna have an address or a sign down at the front?
We've actually been discussing that and even potential for a video screen that has an address
Okay,
assigned to it. So it's definitely a possibility.
okay,
Nothing finalized yet.
And
All
we're
right.
gonna see outside of the college, just so we can do our own messaging instead of paying,
Mhm.
to be somewhere else.
Anything else on page 13?
Yes. With all of this that's going on with the federal government, is this USDA, that's the United States Department of Agriculture, Rural Development. Is there any issues regarding the stability of that kind of a thing continuing? And that being,
No, I don't believe so. I don't believe there will be any issues with that.
because we're paying them back. They're gonna want our money, yeah.
Yes, they want our money, correct.
okay.
We're paying back the bond on it, so.
And for some reason, my brain isn't saying it, but the interest payment on the Copper Mountain Mesa, that's something that's listed here, but that's actually something that area up there specifically is paying for.
Yes.
It's not generally being paid for by everyone.
That's what
Okay.
it flows through to the parcel owners on the property tax roll.
Okay.
And so we have a total here on the regular check register of 367,380. It's on the lower side compared to some of them, but still a big chunk of money. Page 15, we have the payroll check register, and if you recall, some of these transactions, actually quite a few, $1,589 on this page are medical FSA use, which is coming out of funds that we've withheld from the employee. $1,141 is actually payroll FSA processing costs. Questions on page 15?
That's a boring page.
All right, page 17. So we have our utility refund registers. These are refunds from the deposits that customers put on file with us on account when they establish their account. And when they close their account, then we apply that to whatever balance they have due. If the refund exceeds the balance due, then they receive a check. And so that's what we have here. These look like very average refunds. Questions on page 17? All right, then moving on to 18, 19, and 20, we have our stipends listed with various events or meetings that were attended. And that total was 3,125.34. Questions on those pages? All right, that is the check register then.
Did I just hear that we're done?
We're done. Yes, thank you.
Any further comment from the board on this thing while we're at it? Is there a motion from the board to approve the 2025, March 2022 check register?
I motion that we approve the check register.
I'll second.
Thank you very much, General Manager Johnson. A roll call, please.
President Flowers,
Aye.
Vice President Doolittle.
Yes.
Director Fig,
Yes.
Director Short.
Yes.
Thank you very much. Motion carries. Well, here we go. Budget workshop number 2. The 24-25 revised budget and the 25-26 proposed budget. As of this moment, 9:23, we will pause the special meeting for a workshop. As workshop on the stated action calendar item. The workshop will begin after the board has reseated themselves below in a workshop configuration. And our purpose is to review, revise, and recommend approval at a future meeting and consider a rate resumption option. Are you whispering at me?
No, I said, oh, that's right. I forgot that part.
I'm gonna grab a chair that doesn't squeak.
Oh, okay.
Mine squeaks, so. Good, we'll blame it on you. Yeah, we need to work on that a little bit. That and
You
the,
want a squeaky chair.
this door over here too is,
Oh, it squeaks.
can't open.
Oh, yeah, I don't like squeaks. I use WD-40 on everything.
You can't turn the key in the,
Oh, really?
Dave keeps an
Want to
eye
keep
on.
that one? Do you want to keep that one or switch it out?
Oh, yeah, I'll switch it out. To the weeks.
Make David sit in the squeaky
I'll
one.
give it to somebody that's not.
I think he swapped, so you had to sit in. Look at the rock right there for.
If you want to,
I'll take this.
Paperweight?
if you want to sign it, then I'm going to put it in the last Gabion wall.
Oh.
It's a great idea. It's a great idea. Maybe just spray it like a shot.
Yeah. Yes, yes.
Well, we need to kind of all sign it on one side.
I even washed it.
Yeah, it's a good looking rock. It's a really good looking rock. I like rocks. I have rocks in my landscape. And I knew a woman that she got a lot of rocks for her landscape, big boulders and stuff, and she says, it's a sequence. You know, like once you start getting, you'll be like, I want that one. Yeah, I want that big one.
Jane's signature or initially on it.
It seems like that's always in talk,
We like you talking.
Oh,
You did a good job.
thank you.
Well, nobody requested a break associated with this move, so. Melanie Johnson, Director of Finance and Enrollment, Director of Administration, David Cook. And on.
I know.
Member Johnson, if you please.
Right, so this is our second meeting in our budget workshop, and I think we wrapped up a lot of things last meeting, so this is just to give us the opportunity to talk about a few changes that have happened since that meeting and bringing back more information so that the board is able to make a very informed decision the next board meeting when we bring the full budget back. So Anne, you want to get us started?
Sure, let's see, I will turn it over to you when we get to the most
Staffing.
recent changes
Yes.
and let Sarah really explain that in detail, but let me share my screen here. We have the PowerPoint.
Well, I'll make a point too, that this is a workshop, so it's somewhat more informal. So Bill, if you have anything to say, or anybody out there in TV land, just get our attention and you'll be allowed to speak.
All right, so this is again, our 24-25 revised budget and 25-26 proposed budget. We reviewed last on May 1st, as Sarah said, and a couple of changes were made after that point that we had mentioned were forthcoming. And those were included in the budget that's in the packet. There were a few changes made after that that didn't make it into the actual budget document, but I did put estimates in the staff report. So we'll talk about that a little bit and hopefully it won't get too confusing as we go through. So I'll start with, last time we talked about why we budget, and I won't go through this whole thing again, but just again, a reminder that the decisions that are made by today's board have the ability to impact not just current ratepayers, but also future ratepayers in a positive or negative way. I thought this was interesting and I wanted to share it. I saw this article this past week in a CSMFO, California Society of Municipal Finance Officers newsletter. And it was about uncertain economic times. And so the quote that I brought in here is, now is not the time to be messing with your reserves. Financial reserves are there to help us avoid major catastrophes. They are not a tool to avoid making difficult budget decisions. If your agency is fortunate enough to have an additional budget stabilization or rainy day fund, resist the temptation to use it during this light drizzle when you know a bigger storm is coming. If your reserves only meet the standard 2-month minimum, they are probably not enough. Well, we are fortunate that we do have by policy a 6-month reserve that we maintain for these types of situations. I also wanted to mention in response to this that JBWD is planning an intentional drawdown of reserves to offset temporary cost reductions that increased reserves beyond our projections. So this will allow us to continue important capital work. However, pausing or reducing rates is really not a good or advisable move at this point to maintain reserves in times of economic uncertainty. So let's go into the changes, the specific changes that were made. So these are the items on this page that, on this slide, that were included in the budget document in the packet. We added $12,833 to the small tools mechanic account for a total budget of $20,333. We added $1,250 to our office supplies account for board director uniforms for a total budget of $27,680. And we added 12,000 to employee training for Class A training for a total budget of 44,000 there. And then I adjusted all the departmental allocations accordingly. I wanted to point out that in this budget, you will notice that there's only one option for 25-26 presented. Last time we had two options, but I believe we settled on moving forward with resuming the rates in some capacity. And so we have just that one option now included in 25-26. Salary changes. So these are the changes, actually, what we made, the changes that we made to 24-25 were just a cleanup of the salaries and benefits budget related to the purchasing and accounting technician positions that we were determined not to be funded. And the pipeline crew positions had already been removed, so we just cleaned up those additional positions that were never filled and adjusted the departmental allocations. Those changes are included in the budget document. Now, in the pink here, and you'll see this as I go into the more detailed screenshots, changes that were made after the budget and this packet was generated. And these items are also shown in red on the staff report. So we made changes to several operations positions to strengthen supervision, provide clear opportunities for career advancement, create pathways for succession, and provide a proper chain of command. And Sarah can elaborate on this a little bit more if she'd like to. There was also a new maintenance worker 3 position that was added, and salary adjustments to 3 other operations positions. Would you like to comment on that at this point?
You did a great job there. So one of the things that we've asked our interim director of operations to do is to do a complete overview of the staffing structure out in the operations department. And it's taken a couple of months to really get into the meat of it and understand how our organization works and to find an optimal way for it to work going forward. And what's being proposed here is to add a maintenance worker 3. We currently have what we were calling construction and maintenance, and we're trying to simplify where possible. So those titles will get simplified from construction maintenance to maintenance. And right now we have a maintenance 1 and a maintenance 2. And then the next level is to jump straight to a supervisor. It's quite a substantial jump. And it doesn't leave a very good pathway for training and succession. Adding this position gives you one more chain of command. We need a very thorough chain of command in the operations department. And so this structure will allow for that. So that was the thought process behind adding this one additional position. So from the budget proposal last time to this time, there's 9 positions that were being removed, 2 added. So it's still a net of 7 positions removed, 6 of those being CIRP, and then 1, well, confusing to say it that way, a couple of office positions, adding 2 operations positions, but still a net loss of 7 in totality. So we'll be at 25, including my position, I believe.
Right, without the directors.
Yes.
Mhm. And so what I had included in the packet in red was the estimate of those changes. Now I've adjusted a few minor cleanup items. So when I go back through here, if I find any minor mistakes or anything like that, I clean those up as I go through. So, as we're still working through this process. The end result was actually less than what was estimated in the packet. And so these changes amounted to $184,296 of an increase in salaries plus $88,798 in benefits related, which would result in an increased reserve drawdown of $273,094.
So what is this maintenance worker 3 position? What does it do?
Well, it's everything that a maintenance worker 1 or 2 can do and can sub in for supervisor role. So they're a lead. Right now, there's not really a lead. You have a 1 and a 2. A 1 is an entry level. You can basically come out of high school straight into that position. A 2 is a couple of years of experience in a D2. And they're not prepared to be a leader yet at that time. So a 3 is much more experience that allows them to lead a crew out in the field and then provide that support to that supervisor role.
Okay, I I would have thought that number one would be
The number one. Yeah. In this industry, the higher the number, the more experience, I guess is the best way to put it.
Thank you.
I have a few questions on this page. So, is net revenue at the bottom, is that net operating revenue? You know, that's my favorite phrase.
On which page are you on?
On page 22.
22. So net revenue, yeah, that is the,
Net revenue.
not just the operating, well, it is overall. This is overall,
Okay.
operating and capital.
Oh, okay. Okay, so I'm a little confused by the paragraph in the middle that says it's part of these improvements. Because the dollars here seem to be different from the dollars there.
They are, they're
And
somewhat
that's-
different because this was an
Okay.
estimate that we did right before we had to publish the packet.
Okay.
And so after that, I went in and actually made the changes and the figures came out a little bit less, a little lower than what
That's what
was
I
in the
was thinking.
packet. Yes,
Okay.
yes.
So, these changes for a maintenance worker will result in an increase to the salaries budget by approximately 192,000. That's primarily for one position?
So let me explain that.
Okay.
It's the new construction maintenance maintenance 3 position. It is 2 other positions that where the salary structure changed a little bit.
Okay.
We
Oh, I see.
also,
I see. It's up there on the slide.
yeah, one thing that wasn't mentioned is I think we originally budgeted the supervisors at 3/4 of a year, thinking that we wouldn't be able to hire them as quickly. Now we have budgeted them for 100% of the year, thinking that we need to hire them more quickly. So I think those were the major changes there.
And all of the positions have been reevaluated. We haven't implemented it yet, but right now, the jumps are not just in salary, but the jumps are also in their certification level. So we want to make it so that succession makes sense. You know, a 1 means a D1, a 2 means a D2, a 3 is going to need a D3. And so you have that succession where it makes sense with the certification. And each certification has been established a point system. So Ray was really good in helping me come up with this plan, but each certification, so if you have a D1 and you have a class A, that's 2 points. And if you have a water quality specialist, for example, would have a cross connection, they would have a D3 and T2. Well, now you have 6 points. So you can, on a spreadsheet, you can see how the salaries make sense. And they match the certification level of the employee and provide that progression.
Okay. Thank you. Makes sense. Sounds good. Question.
Is this position, are people currently qualified to apply for it, or would this be an outside search?
Good question. If they're qualified, they're welcome to apply for it, whether they would get the position or not, that is TBD, they have to go through the process. It's, I would say likely, because we're a very young workforce, that we may not have that in-house, but there's a potential. We definitely like to promote within if it's possible, and if it isn't, then we need to seek someone outside.
All positions are posted internally first.
That's true. Our policy does require all positions to be posted internally first, so
So
that
people can apply, but they may not qualify.
they may not qualify. No, and all of the positions say, there's a little clause in there that says, this is the experience we really want, but if you have something that's really close, it might qualify you. It just depends. You might have 20 years of experience in a D2. Maybe it makes sense if that is enough, but it wouldn't be enough, for instance, for a director of operations. Or maybe they don't have a class A and we don't need the class A for that position. So there's things that we can consider, but we want to stay as close to it as possible because it makes the most sense and puts us in the best position. The one thing that Anne brought up a little bit earlier, the training budget is class A. We only have 1 class A driver right now, and we definitely need some backup and that as well. And class A has gotten very expensive to obtain. You have to send people to a school now. It's several weeks long and several $1,000s
Several
to get a
weeks, huh?
class A.
Were they away for several weeks too?
Yeah, they can be.
For class A? Wow.
I know it's really become quite comprehensive. So we're working on trying to see what we can do in-house versus what we can send out. But the cost of the schools, we have done costing on about 4 different schools, and it's on average about $6,000 per person to be trained for their class A. It's expensive.
Yeah, it's a lot. All right, I will move forward unless there are any other questions at this point. We'll look at the combined budget next. This also shows us a departmental summary. Total here, if we focus on 25-26 in revenues, this has not changed from the scenario that we viewed last time with the approved rates, 12,216,017.50. And our operating expenses our operating revenues do exceed our operating expenses with this scenario. You can see here by department, totaling operating expenses of $9,590,244.40. And then adding our capital expenses, which have not changed at all. Those are the same as what we presented last time. Those total $4,896,000, and the total of operating and capital $14,486,244.40. That leaves us with a reserve drawdown of $2,278,226.90. So the difference is that the reserve drawdown increased by that $273,000 for the salary changes, salary and benefits changes. Questions on the overall totals here? We can always come back to that if we need to. So here's a graph of that showing our total revenues, total operating expenses, total capital expenses, and our reserve drawdown. So just a visual that matches what we just talked about on the last slide. All right, if you're interested, here we have a pie chart of our operating expenses by department. So you can see how those carve out among all of the different departments by percentage and by amount. Production is actually our largest department, followed by distribution, and then I think administration and finance. And you can see where the bonds, loans, and standby fits in. Any questions on this before?
Excellent demonstration of pie chart. Is there ever a way to compare your district in pie chart form with other districts?
That's always I mean, yes, you can, but it's not always apples to apples, and so it can be misleading. It's something that I would tend to not want to do because I think it can be misleading. The way they classify certain things may be different than how we classify them. I don't know if Sarah had a.
There's no industry standard of pie charting or.
No,
Yeah.
because it's not apples to apples. What we have, our expenses, for instance, we have the chromium treatment that we need to put in, but the district next door doesn't. So you wouldn't be necessarily measuring the same types of issues at each district. Some have a lot of customer base and some have smaller, some have a lot of pipeline in area, some are very tiny, only 2 square miles. So it's really, it's not, that's why there's so many different special districts out there, because they're all special and they all have a very different and unique base.
No, but it's great visual.
Thank you.
So I have a couple of questions. So then operations is like 49% of the budget of operating expenses, right?
Yeah, production
And
and distribution,
distribution.
and we have customer service field. Where's that? Let me see, customer service, so we have customer service field. Are they not showing up in there? That customer service, I think, is office. Oh, that's combined. I'm sorry, yes. So
Oh, that
That is also,
yeah.
related to the field
okay.
operations. So, yeah, definitely, 50% or more.
Yeah, okay.
Mhm.
Another question from Bill.
Do you have a comparison year to year in that same form?
I don't have one here today, but if you look at our budget documents, which are available on the website, I usually do have a similar pie chart in each budget document, so you could look at it in that way.
And then I guess we'll talk about it somewhere else, but the report studies and plans is only $10,000, is that right?
Report studies and plans, 510,000.
Oh,
Yeah.
There are my glasses, all right,
It looks like
yeah.
a dollar.
Yeah,
seven
from-
minutes.
especially from a distance.
I saw the 10 too.
Yeah.
Yeah, it's,
Okay.
I have a question. So the pipeline program, the 27,000, that's the outsource?
No, that is actually the operating expense related to mostly what we think it will take to maintain the equipment. The actual outsourcing will be in the capital budget. This is just these are the operating expenses. So there will not be, as far as what we know right now, the way we're planning this is that there will not be, other than that 27,000 pipeline program expenses in the operating budget.
Okay, yeah, I thought.
So will we see, this is always confusing me a little bit, the separation of things. Do we ever see a budget that has all those things together, the operating and the capital?
We see, yes, we do.
Right.
I mean, we see
Okay.
here this, in this combined budget,
Okay.
we have our operating, all of these departments within our operating, and then we have our capital budget. And the total reserve drawdown, related to that. In your packet,
Oh, okay.
I would say you would want to look at, so you have page 27, which basically shows
Looking at it,
this.
yeah.
This just has the updated numbers on it.
Well,
But that does show you everything. It doesn't show you the detail of the capital budget. That's in there separately.
yeah.
But yes, you can see it together that.
I see it together, but total capital pipeline and then total operating pipeline, we never see that together, right? So,
No,
okay, and so in a budget, is the capital and the operating part of the budget? So like if we had a pie chart of both of those together, then operations would be bigger than 49% or 52% or whatever it happens to be. Or-
yeah, that's true. Most of capital is operations.
Yeah, okay.
So I mean, you can basically say 99% of the capital budget is usually related to operations. So yes, it would be significantly more.
Right, so that's what I'm trying to understand is, what is the total spend, and I can't tell if they're divided out like that. And I just try, why are they divided like that?
Because the capital budget results in assets
Oh, that's right.
and the operating budget are expenses.
It's like Gatsby stuff.
Yeah,
Oh, okay.
yeah.
Uh,
I mean, I could do a pie chart if that's something that would interest you, a pie chart that shows all of
That
those
would.
together.
that would, but I see Director Short shaking his head, so I think he would like that as well sometime.
And help me understand this, make sure I'm correct in this. The operating budget is based on revenues. And what's left over is what's left over for capital, and then we use reserves to supplement those projects. Is that right?
Essentially, yes, we have our revenues and then we deduct our operating expenses for net revenues after operating expenses. And then that money is actually designated to fund various reserve accounts. And including the capital, which is where we get the 2 million that's designated towards capital or pipeline, capital and pipeline, both actually. And then, whatever's left over after that is total net revenue or drawdown. But yeah, you're essentially right.
So if I had a personal budget, I have my paycheck goes into my checking account. And my expenses, my house payment and my electricity and all of that comes out of there. And I designate a portion to go into my savings account to pay for auto maintenance.
Mhm.
And then I pay for the auto maintenance, that would come out of the reserve. So it's
Yeah.
similar. So it's
Yeah.
whatever's left over after everything goes in is what we have for capital. Plus reserve.
Capital plus the reserves,
Reserve.
yeah, so the reserves include things that may not be capital. We have in the reserves, the reports and studies, which are now not capital. We have the equipment and technology reserve, which may or may not be capital items. Usually they are, but sometimes they might not be. So yeah, it gets a little, it's confusing. It's a little confusing.
Yeah, why don't we say that, why don't we say that, capital costs come out of revenues because of GASB requirements?
Well, they do come out of
They do
revenue.
come out.
Yeah, everything comes out of revenues
Okay.
ultimately.
Yeah,
But one is, the reserves are really a cash flow issue and the other is not. So, you're putting savings away into those reserves, but that doesn't have an impact on, ultimately the foundational items here are what you're taking in, which is your revenues, and what you're spending, which is your expenses. And capital and operating, all of that comes out of the revenues that we take in or the reserves that we've set aside. So, yeah, so like the example that Sarah gave, you might have enough new revenue coming in that you can fund everything with that revenue, or you might have to dip into those reserves to fund your needs.
That you did over time.
Yeah.
Right? Yeah, it's over time as opposed
Yes.
to that. Okay, I think
Yeah.
that's it. Okay, thanks.
So if I, suddenly have another car payment again, and it's $2,000.
A new truck.
Pardon me?
I said, buy yourself a new truck.
When there's something wrong with the old one. At any rate, so say that the payment is $2,000 a month for the new truck, and I think to myself, well, Tom, you better set aside out of your monthly income $2,000 a month. That then becomes a reserve, you might say.
It could be a reserve or it could just be a budget.
So so the money, when it's gone from my checking account to make the payment, then from my revenue, which follows is 2,000 of that is going to go back to replenish that
Correct.
reserve for the next time.
Correct, correct.
So it's a very active thing. In a way, a reserve is kind of a wrong term because it implies that the money is not active and actively being used when in
Right.
fact it is.
Right, there's a lot of in and out with the reserve account. So,
Yeah.
but we only we only prepare those transactions once a year. We bring that usually in the fall to the board to approve, but we do have a projected use of the reserves. I have a slide for that a little bit later on.
And I guess that's my question. Of the reserves, are there any that cannot be touched?
Absolutely, yeah.
That are,
Restricted.
and is there a percentage of that you could say, I mean, you could say, wow, we've got a lot of money in the bank.
Yeah, I can show you here on our cash balances. So our ending cash balance is projected to be 22,923,000. 5.692 million of that is legally restricted. We cannot, by law, touch that unless we meet certain parameters.
Mhm.
And the rest is designated most of it is designated by the board. There's a small portion that's unrestricted. That is our cash that we use on a daily basis to pay bills and such. But most of those reserves are designated by the board for certain purposes such as emergency, capital, equipment and technology reports and studies. We have a small building reserve that we need to talk about at some point, how we're going to move forward with that. And we also have a meter replacement reserve that we've been dipping into to do this meter replacement program, and that's coming to an end. We'll have a balance in that reserve that will bring to the board for them to reallocate to another place, to another reserve.
And just one more question, sort of a doomsday thing that Tom has always been talking about. What happens if we have an earthquake and we've got to replace tanks that are leaking? Are we insured for that? Or is that part of the reserves?
If you have insurance,
Limited?
well, that's a good question. I'm not entirely certain what all of the fine print is with the insurance policy. We do carry insurance on all of our property. So, whether they have a disclaimer in there for earthquake purposes, I don't know.
And it's
We
not,
carry the same insurance for,
it's not, the current one that has the problems with, reimbursement right now, State Farm.
oh, no,
No, we can't go to the marketplace for
Yeah.
insurance. We're in what's called a risk pool
Okay.
with a lot of other water agencies. That's the only way we can get insured, but we do have insurance. We do have an emergency reserve, and we do have what's called a hazard mitigation plan that helps us to apply for FEMA funds if there was an emergency.
And that plan also outlines a lot of this.
Correct.
And it could take some time for that money to come in.
Yes,
Be that insurance work.
it's a reimbursement thing. So we would have to pay to repair things up front. And then pray that if it's the San Andreas that goes, that it might be a while if they're reversing every entity for the 200 miles northwest of here that this earthquake is supposed to affect.
And there'll be a ton of us vying for the same funds. So that would be.
Yeah. I
So
own
there-
property and I don't.
and the insurance is actually something that I would like to at some point do a really comprehensive review on, but it is what Aqua JPIA offers, and they do have certain restrictions on what they will insure. They, for example, they don't insure underground like pipeline. So pipeline is not
Wow.
insured. And that's certainly something that would be vulnerable to an earthquake.
Wow.
Yeah,
Wonder
So-
why they don't insure the pipeline.
yeah. Something,
I don't know that they could afford in the pool to replace it all. It's just.
Yeah.
It's
Yeah.
so much of it.
Because it'd be premiums that
And there's only there's quite a few risk pools in California, but ones that specialize in the water industry is fairly limited. There's just a few. There's SDRMA is the other main one that I can think of. So there's not a lot of options for, switching around. And they go to the marketplace to get insurance. So for instance, health insurance, they negotiate with Kaiser and they negotiate with EFM. But if we went there, the prices would be unreachable. We wouldn't be able to afford it.
Director Doolittle mentioned the term gas requirement. And for those that don't know, that's the Government Accounting Standards Board, which promulgates rules that are called the generally accepted accounting practices in the United States of America. And we are bound to follow those rules. And the significant part of our yearly audit is to test our conformance with those rules. In other words, we don't make this stuff up.
and just like the state with all of the compliance reporting, they come up with new requirements every year, several new requirements every year. Yeah.
You'd probably say it's progress.
All right, well, I don't think unless someone else thinks we're ready for a break, I think we'll move forward still. Yeah.
Break.
Breaks.
Break at 10 o'clock.
Okay. 10 minutes.
That was mentioned, we need. Anyway, workshop is back in session again at 10:06. And Roman?
Thank you very much. All right, we'll move on into some salary detail. We have the salary and benefits summary here on this slide. And again, this changed a little bit from what was in the packet. As we discussed earlier, you can see on the slide, the items in pink that changed. These all relate to those position changes that we talked about. And the bottom line here, again, that same number, $273,094 is the total increase of the salaries and benefits related to those changes. And that reduced, just if we want to compare to 24-25 original, there was a $923,000 $579 reduction between 24-25 original and 25-26. That's been reduced to $650,484, but you can still see there is a substantial savings there.
What slide is this?
Oh, sorry, you can refer to page 22 or page 32. Probably page 32 is a closer match to that. 22 details all of those position changes, so. Now, again, you'll see the figures are slightly different here because these were changes in the pink that were made after the budget document was prepared for the packet.
So this is where I could point out that our revenues are predicted are an estimate, and our costs are an estimate. So this stuff changes all the time. This is just a general guideline, and it's your job to steer all of this through all of the
Yes.
vagaries that are
Good way to put it.
involved in running a water company.
Right. And so we are, these have been workshops, and so things that have come up like this change with the salaries and benefits, those positions, those things we're trying to incorporate that and capture it as soon as possible through this workshop process. And normally, once we adopt that budget, it's going to be in place for that next year. However, there are times when we'll have to go to the board and ask for an amendment to the budget. There are adjustments to the budget that can be done under the general manager's, authority. And so, but yes, once this is adopted, hopefully at the June 4th meeting, it will be in place for the next year. And I actually have something about that later. Any questions on the detail of the salaries?
So the amount on the slide is the accurate amount. The
Is the
amount in
accurate
the
amount.
packet is inaccurate because it was printed prior to this.
Correct.
Okay, just want to be clear.
Yeah, and I apologize for that. I know that gets a little bit confusing, but we didn't want to miss the opportunity to include those changes.
Okay.
Go ahead.
No, ma'am, you go ahead.
Well, so the little box down to the right, where it says reduction to total salaries and benefits decrease.
Right, so
From, it doesn't tell me what the decrease is that the decrease is at 922,000?
no, so it was originally, okay, between 24 and 25 original, that figure, that decrease between the 24 and 25 original and the 25-26 was 923,000.
Okay,
It now is 650,000, so the change decreased. I know that's confusing, the decrease decreased.
Yeah, that's right.
So-
It seems like a double negative
It
or
does.
something, yeah.
The actual decrease is 650,000 and change.
Bill?
Yes, the new decrease is 650,000 between the 24-25 original salary and benefits
And the
and the
proposed.
25-26 proposed.
Bill has something.
At what staffing level is this showing? Are you at 100%, 80%, 60%? In other words, are you also planning to have a new position and to have a certain component of full-time people?
There'll be four positions that need to be filled after the new budget is adopted.
And this includes that.
Yes.
Yes,
Uh,
they are included.
And
We've,
they're not necessarily new either. We're in the middle of recruitment for some currently budgeted positions.
we'll zoom in here on the next slide, which I've just kind of penciled in here, the added maintenance 3 position and updated these totals, which we were showing a total of 29 positions. That includes the board. And that has increased to 30 now with this maintenance 3, and I have to get used to not saying construction. But you can see that the comparison between the 24-25 original percentage of revenues, which was 48.5%, has come down to 37.62, even with the changes that we are proposing now.
So 50% of revenues was salary and benefits
Very close to
yearly.
it. Mhm.
And now with these changes, 37.6%.
Right, right. So we're still decreasing salaries and benefits as a percentage of revenue to a very reasonable number. Even with these changes that we're proposing.
And again, not apples to apples, but just for comparison's sake, because the question got brought up earlier. This number, 37%, is really close to what I'm seeing at other districts as well.
Any questions on these details? These just show us the positions that we have budgeted for. And those that were unfunded in this budget. And that, we talked about that before, the purchasing and inventory technician, the second accounting technician, I want to be clear about that. And the office assistant for 25, 26, and most likely going forward, so.
So, included in all of this is a revision of this preceding fiscal year. And so we've had to make changes in the predicted revenue and spending for last year. You're going to approve that. And
Yes.
then since you created this packet, the information that we're seeing on the screen has been modified. And so revenue, which is where most of this stuff, ratepayer revenue is where most of this money is coming from. The amount of money that we receive from our ratepayers is potentially going to fluctuate too. And so I'll just reiterate, this isn't a tight thing like notches in a belt where you can only do this. It changes a lot as this goes.
Variables.
And that's why we have a staff that monitors all these things and makes decisions and corrections and stuff as the time goes by.
Correct. That is correct.
Just want to
We're constantly, yes, we're constantly monitoring.
It's not that we didn't know what we were doing before and we have to fix it now. It's
We don't have a crystal ball.
conditions change,
That's true.
which specifically is the amount of revenue we're getting from our ratepayers.
Right.
And we even see
Right.
swings in that month by month. I mean,
Yeah.
last month, March, it was 360,000 or whatever we spent, but in the other months, but we spent over $900,000 a month. We know that.
Revenues can change, expenses can change, any change in market conditions can impact the expenses that we see come through. So, there are so many variables, and that's why a budget is just a projection. And we are constantly reviewing that and looking for needs to adjust or amend the budget. Did you want to say something as well?
I think you did.
I think it's just a good opportunity to talk about something that comes to top of mind often is this. Has everyone heard of the sunk cost fallacy?
Oh,
The what?
The sunk cost fallacy. So this reminds me of something you might say. So it's a phenomenon where a person or organization is reluctant to abandon a strategy or a course of action because they've already heavily invested in it, even when it's clear that the abandonment is more beneficial. So we have to be careful to not fall victim to that fallacy because everything needs to be reevaluated, just like the pipeline crew, just like any of these things. That's why we come to these workshops, just like the plotter from last year. They all need to be reevaluated. Does it make sense? Does it make sense? It doesn't make sense now that we may be outsourcing pipeline.
Yeah,
It doesn't
so
make
glad
sense
we
to
didn't
have
do
to set
that,
it in and
yeah.
purchase it.
See,
So-
I was right, you guys.
Crystal ball there.
Yeah, interestingly, I related to sunk costs, we're kind of insulated here. Here we are in the board meeting and people don't attend and we think people don't know what's going on. And I went to a local restaurant and the owner, she's asking me what I was doing and I brought up the water district and stuff. And she says, well, yeah, I heard that you guys are, now you're gonna outsource all the work after buying all that expensive equipment. And you know what I mean? And I was like, I said, where did you hear that? Because I was so surprised. And she said, oh, somebody used to work there. And Anyway, but it goes back to that sunk cost fallacy. That was the first thing I thought of was that, here we invested in this equipment. And she's like, what are you gonna do with it? And I said, well, we're gonna sell it. I
No,
think, we're gonna wait.
It's going to be stated and then
Yeah.
next year reevaluate.
Right, that's what I told her.
Right, and then potentially sell it.
Yeah,
That would be
yeah.
correct. But it is really important that these things, whether, we're sitting at this table or future people are sitting at this table, that they're reevaluating decisions because the conditions change, just like
Right,
you were
yeah.
describing. That's what brought that front of mind. Conditions change all the time.
Mhm.
Administrations change and politics change, and based on those changes, we have to course correct. Otherwise, our ship's
Yeah.
gonna, sail into the wrong place.
And one of the things that worries me a little bit about the potential, and we'll reevaluate, one thing that I've always felt confident about was being able to face an emergency because we had that equipment. You know what I mean? Whereas if we're relying on, companies, I know we have maintenance crew and stuff, and some of that equipment would be used for that, right?
Yeah, and
So-
we probably wouldn't want to sell 100% of
Yeah.
it. Probably some would be really beneficial to keep, but we'll, evaluate
Okay,
that as
yeah.
we get closer. Some of it wouldn't make sense to keep and some would make sense. But you're right, keeping it is good, mutual aid is good. It's good. for-
Yes, yes,
Yes, it's definitely good, but we have to have operators for it too.
Yeah, right, yeah. Or you could learn how to do it. You could go away for 6 weeks and learn how to do it. Yeah.
That would be fun.
Yeah, we all like to run the
David
paper.
mentioned it.
Yeah.
All right, so next we have a graph here of the salaries by department in the proposed budget. Just so you can see how those play out among the departments. We kind of saw the overall expenses by department earlier. This is salaries and benefits by department. Again, with distribution being the largest salary, production is actually the most expensive department, but that is because of electrical costs, pumping, power for pumping, and it is also because of recharge water in that department. But on a salary basis, distribution will now be the lead department here in terms of costs. And
We think about it this way, production is the heartbeat of our organization. It brings the water out of the ground.
Yeah.
And distribution is, our main system, and you can't have one without the other, so they
Right.
really are very
That's
integral
right.
to our business.
good analogy.
Okay, so which one of these was reduced in this new plan from last year's budget as far as salaries go? Production.
It was it's not here because we don't have any salaries related to the CIRP, which is now pipeline, in the operating budget.
Oh, again.
Yeah. And even last year, we only had some of the pipeline salaries in the operating budget because ideally, all of their work or most of their work would be capital. They would be working on capital projects and their salary would be attributed to that instead. But that wasn't the case. They weren't 100% working on capital projects. They worked on some other tasks like the meter replacement program. And that would have been captured here, but this is just 25, 26, and we're not projecting any salary or benefits costs related to the pipeline crew. Does that answer your question?
Yeah, a little bit. I mean, I don't want to make more work for you, but I feel like sometimes I don't get a clear picture if we divide these things up.
Yeah.
But anyway, yeah, and
Essentially if we end up outsourcing it, which is what we're talking about, we won't know the salary and benefit component
That's
of that cost. We will just see
What the contractor proposes to
the
us.
contractor's total cost.
Right, yeah.
Yeah, we won't necessarily have that kind of information.
And this board of directors salary at 54,000, I kind of estimate I make a whopping $8,000 a year here. And if I multiply that by 5, that's not 54,000, is it?
Well, this has an increase included in it.
Oh,
With
the
the-
increase. The increase. Okay.
Yeah, this, we're projecting
Preparing for that.
Right, okay.
Yeah,
All
we're
right.
projecting
Yeah,
that.
that, it's not necessarily gonna be used, but it's potential.
Yes.
Planning.
That's right. Okay. So any other questions on salaries and benefits before we move on into the capital budget or reserve use? So here is the capital budget in more detail. Again, no changes from what we talked about in the last meeting. The total drawdown, however, that's shown here, which is the combination of the operating expenses and the capital expenses, has increased by that salaries amount, $273,094. But the capital budget in isolation is still the 4.896 million that we previously discussed. And all of the
35,
projects
yeah.
here listed, oh, sorry. Page 35?
No, that's what he said for it to look at, yeah.
Oh, okay, yeah. Yeah, so this is just the breakdown of what is included in the capital budget. Again, no changes. Here is this slide shows us a little bit more about those projects. The non-pipeline projects amount to 2.596 million, and then the pipeline projects 2.3 million. No changes again. Any questions on any of the capital budget items?
I have a question. So this 24-25 budget, that means in the first column, we spent 955K.
It means we're budgeting for that, so
Oh, finalizing the budget
we're revising the budget
to
to
21,000.
To
That's about-
21,000, that's correct.
Wow,
Mhm.
wow.
I went on a field trip. I'm looking at this A1 road rehab, $200,000. I thought it was worth, for that amount of money, it was worth a field trip to go out there and have a look at it. And it doesn't require four-wheel drive to actually approach the gate. But that road is incredibly bad. And the environment right there, that hill it seems like a pile of broken rock. Just wondering if we were gonna outsource that or if we were gonna do it internally, because it's gonna be a big deal doing that. To improve it, because it's so steep, the road has to be lengthened. There has to be either more switchbacks in it, or it has to go farther around the hill to get to a switchback. Because this process of having to tip a vehicle to go from the one leg to the next leg with maybe a tractor that's high center of gravity and that kind of stuff is going to take a lot of work.
Yeah, the plan is to outsource it. It needs engineering for all of those reasons you just described, and
Is that going to be a separate
it's in
item?
here, actually.
Engineering.
It's down here. Which line is it?
269 is the
269, yeah.
general thing.
200,000.
That's what we're estimating that would be.
Yeah, but we need it. Also, by the way, C3, it's kind of scary having to turn around once you get up there to the tank, because you can get up to the tank. And the drop off on the south side of that area in front of the tank where you would turn around is precipitous. And some sort of guard railing or something. I can't see how it could be enlarged because it's so steep on both sides. But for the future, C3 for safety purposes, and also the road's bad too, but it's somewhat more drivable.
Okay, it's good to note that.
All right.
And so I have a question on this. So the dump truck, that would be something that we would need for maintenance.
That's for
Okay,
maintenance, yes.
okay.
Also, did I understand towing capability too?
Yes, that's right. We can build to trailer most of our equipment with the exception, I think, of 2 items. Right now, I think there's 5 or 6 pieces of heavy equipment. We have to utilize a local company and they move it for us, or we have to road it.
That could be a problem in an emergency though.
It's probably an emergency. They're pretty responsive, but definitely we have to schedule it out. So emergency purposes that we would have to road it. And that could be an issue too, depending on what the emergency is, if we can even, I guess you can use the equipment to make a new road if you needed to, but.
Okay, so on line 259, the stormwater exhibit. So that's money that's coming from a grant, that 28,000?
A portion of it is, I don't.
The portion.
10,000.
10,000?
So we're spending $18,000 on that? That's not just-
We're utilizing the grant. That was
Oh,
a projected just for that, for this year. But moving forward, that's not a capital project for 25.
It got moved to a expense project.
What is the stormwater project?
No, it's a capital project, but it's, I think it's coming in under this budget. Is that
Yes.
correct? Yeah.
It is to put up the Gabion wall that you can see today was partially installed. And it's to help mitigate floodwaters from reaching the building and just a mitigation tool to keep water from, whenever we have bad floods here, it just washes out that garden and so much work has to be done. So this is to slow the flow and get it back where it needs to go. And it's a relatively inexpensive way to do it, because each time we've had to rebuild that garden, the amount has been $5,000-6,000 to put things back together.
yeah, I'm just displeased with that, you know, I've said it before, and it makes me, you know, it's upsetting to me that we're doing that and we think that that's the solution and that it doesn't seem to be of an overall plan with everything, you know what I mean? It's just a wall and we're not integrating it with everything, you know, we haven't been presented an overall plan. So, but so we're spending, how much is the district spending?
On what?
If this is $28,000 and we get a 10,000 in a grant, I said.
We're not even spending the 10,000 of the grant.
How much do you know what the costs are total to date?
Yeah.
7,600 though.
Okay, so why does this say $28,000?
That was what was budgeted for, and we left the budget in there so that we can finish the project that was already was approved in the last budget.
Right, so the revised budget then says $28,000 before we're spending out $8,000.
We're in the middle of the project. We wanted to make sure that we could be able to finish the project.
Wow, so you needed that much wiggle room? That's a lot
That's
of wiggle
what
room.
we thought it was going to be in the beginning, but there was some changes to this too. I think that it had to be put out.
This project morphed so many times, and
Yeah.
I think the description of the project is not necessarily a good description any longer, so, you know, there were a lot of changes.
It also included the enclosures, part of the enclosures, right?
No, that was
No,
separated out.
that was separated out.
That was separated out into an.
And that's 23,000.
Yeah, that was kind of based on estimates that we got previously when that, and then once I researched the costs for it, it came in a lot less.
So I will say that not every project in the revised budget or every line is tightened up. Because if it's not, I know that sounds
It's
like a
not
big
done, it's not
difference.
finished.
Or not finished, or we just don't have enough information, or it's not, it doesn't seem to be significant enough. We don't go back and line by line reduce every account that may come in under budget. So we do that for the more significant projects and the more significant accounts. So that's why this hasn't been adjusted either.
Yeah, I kind of thought it earlier and I said I wasn't gonna say it or ask it, but I guess I am now. That's why we never say it's an accounting like it's a finalized thing when we post it. It's always remains as a budget.
It's a budget.
Yeah, that's why.
These are budgets.
Even when they're finished, even when the year is passed, we're not gonna go back and fix this 28,000.
We won't
Is what
fix it in
you're
the
saying.
budget, but we'll have actual figures
From
to compare with
the
the
audits and stuff like that.
From, yes, from our fiscal year end financial statements and from our audit, yeah, we'll
Yeah.
have actual figures to compare with the
Okay.
budget.
And then, so this column on the right says outsourced pipe approved rates. And then we have all this stuff underneath that column, you know, that talks about, you know, the emergency repairs. So we're not saying that all those things are gonna be,
No,
why is that column called that?
because we were originally comparing two scenarios that both included outsourcing the pipe. And one scenario or one alternative was the paused rates, and the other one was the approved rates, continuing with the approved rates. So now we've just brought in the approved rates because that's what we talked about at the last workshop. it's still just outsourcing pipe. That's just what the scenario was called to begin with. And so you can't tell from this specifically, there's no indicator here what will be outsourced and what won't be. And some things may be partially outsourced and partially done in-house. For example, I don't know, the ET1 reservoir
right.
upgrade, may have some outsourcing and some not. There's a combination in a lot of projects
Right, yeah,
of those things. So, yeah, that I could see that could be missing.
yeah, like the SCADA security upgrade, I
Yeah.
mean, that, we're gonna do that ourselves.
Well, that could be the vendor.
that's
involved.
We'll have some vendor.
vendor.
Yeah.
But we're gonna buy like below that, we're gonna buy the generator ourselves, right? So,
Yes.
yeah,
So, yeah, the
maybe
column,
the column should be renamed or.
yeah, that's 100% correct. This
Yeah.
is just leftover
Okay.
remainder from the last workshop.
I'm not trying to be difficult, I was just confused. And then the last line, 282, on the Chromium startup cost, just remind us, I'm sure you told us, but what's that 500K, what's the name of it?
It's to get prepared for the next step. So we are meeting with Jacobs next week, I believe it is. And they will hopefully have some direction for us and what the best treatment options are. And from there, we need to start sourcing, probably put together an RFP and start sourcing a contractor to start doing treatment. So this is to get ready and prepared for that. It'll come back to the board before we make any commitments with any vendor on that. But we just need to be prepared this year that we have to start those costs.
So, and it's just like in the past, we've had that amounts in there and we maybe didn't spend it. I seem to remember that because we weren't up to that point yet. So is there any plan or was it in the contract for Jacobs to present any of this to the board?
I'm gonna ask them to do
Oh.
that. I don't know that they'll do that
Yeah.
because we're under that grant, not grant situation. So if their budget doesn't allow, then we would have to pay for them to do that. But I would like them to do that. It's been brought up a couple of times. I've not received a commitment from them on.
Yeah, because I'd really like to hear what they have to say. And I think it'd be hard for you guys to regurgitate everything that they say. So,
It is.
yeah.
So we
And I
will.
really like, I guess the public is so interested.
Well, definitely, you will hear from an engineer on this for sure, because this is going to be a substantial project. You'll need their expertise to help explain.
Yeah, I was just interested in the options they're gonna present as opposed to just the decision that's gonna be made, but we'll be involved in the options.
To a certain degree, I think that with the engineer and with the staff that we're gonna propose what option we think is going to be the most feasible. Some are going to be probably pushed to the side and
Yeah.
not brought to the board.
Unreasonable.
Right now, we're looking at two options,
Oh.
which are both ion exchange and one's either weak based and strong based, and they both come with their own sets of cons and pros.
What was the second one?
It's ion exchange, weak
Yeah, that's-
based and
that's-
strong based.
Weed-based and strong-based?
Strong-based,
Okay.
Bill?
Just a question, sir. Have we ever done a particle sampling of our water system?
I'm not certain what a particle sampling is.
Now they're finding in plastic bottles and things like that.
Oh, yeah, we have, we do a substantial amount of sampling, and I think what you're talking about is TDS, we do sample, yes. For all sorts of things, including
It
PFAS.
would be nice to put that in your newsletter,
I
because
agree.
there's a lot of people concerned about it, that's all.
Yeah.
No, PFAS or microplastics,
Microplastic.
one that is newer emerging, PFAS we have, and we've not been positive on PFAS. Microplastics, I don't know, the answer is I don't know on that one.
You rarely say that.
But I can find out.
In recent past, there was I forget what the situation was, but there was the issue came up about the schematics, electrical schematic drawings, and the lack thereof, that we could not find them for certain electrical panels at certain facilities. And so I'm very pleased to see that we've allocated some funds to fix that. We can
Yes.
get to it.
And the good news is we did find quite a few in the deep dive that Lisa and David have done going through district records. They're older, so they're not exactly, current, but we have at least a starting point. So that part is really going to be helpful and hopefully less expensive because at least the electrician has a starting point.
Excellent.
All right, I will then move on to projected reserve usage. So this is, we talked a little bit about the reserves earlier. These are these specific individual replacement reserves, reports and studies, equipment and technology, meter replacement and capital. This doesn't address the cash flow reserve or the operating reserve or any of the legally restricted reserves. But this is just showing basically the items that are in this budget that we anticipate will qualify to come out of or be reimbursed to the general fund from one of the reserves. And that includes the capital improvement plan, the USGS groundwater study, the AWIA rest and resilience plan, emergency response plan, and urban water management and water storage plan, and meter replacement. I explained this last time, although the program is ending this year, we anticipate in 25-26, I need to do some cleanup work with the reserve that will be, we need to finalize that balance in that reserve. And I know there are some reimbursements that were not made early on. So I anticipate that the reserve will still have to reimburse the general fund to some extent. And then we'll have a remaining balance that will bring back to the board to determine what to do with that funding, whether to put that in another reserve or how to handle that. So it could stay in the reserve for the next round of meter replacements that will happen 15 or 20 years from now, or that funding could be used elsewhere. Any questions on the reserve usage? Oh, and the admin office emergency generator is in there too, for 75,000.
Just one comment, when we had our manager meetup on this page 36, I asked about the 150K on the USGS stuff. I can't remember. I don't think I talked about it in our budget meeting. You guys tell me, but it was my understanding that we were going to get a menu of options, and that the board was, and we were going to be able to say, this is what we want, this is what we want, this is what we want. Now, and that USGS was going to provide that, but it was my understanding, and I know how things move fast and stuff, and maybe that didn't happen, but that this was defined, and that's what the 150K is for. So what is it does anybody else remember that idea of a menu, or that they were gonna give us some options?
I don't know if the options were gonna come to the board, but the options were, I suppose the major options would be considered by the board.
Well, let's talk about that a little bit. So I want to make sure we all understand that a menu of options from USGS is like going to a Michelin star restaurant and then to another Michelin star restaurant and then to another. They're very, very expensive. And sometimes we can get the same results at a lot less cost. So I just want to be thoughtful about that. We're looking at it from all different angles. One thing is working with MWA on some future projects that they can do. Flow modeling, where the water goes, is one of the things that we wanted to find out. But with USGS, when they came in and did the proposal, or the presentation rather, in November, they talked about doing water profiling, which we're able to do now as we have well 15 offline and being maintained. We can do water profiling with a company called Best, which is the same company that USGS would have used to do the water profiling, and it's the same guy. So that's going to end up helping us there. They
What does the
are,
water profile get us?
that's going to tell us what the water quality is at different levels
Oh,
of
okay.
wells. So we can find out if we possibly have better chromium samples, lower, higher, depends on where in the well. And the other thing, the main thing that we had asked USGS is we want to know what our water supply is. What do we have? Is recharge making a difference? And that's one question that Ann asks all the time. We recharge as much as we pump out has been our strategy, but really what is that doing? And is all that water staying in the bowl? The bowl can only hold so much, and then it flows over, and are we losing water? And is there a better strategy? So those are the questions that I recall, and they're still working on a proposal. So when that proposal is finalized, then I'll bring it to the board and then you guys can say, we want this, we don't want that. It's not necessarily a menu, the way you're describing. They can do all sorts of things.
Yeah, I'm glad to know that, we can hire, their resources, and go directly to them. And, cause I was limited in my thinking and just thought they were gonna be doing it all. Yeah, I just remember that there was, it was a great presentation and, we're all very nerdy about it and all that. I just remember that there were several things that we talked about. And Director Short, do you remember anything else beyond what she just said that we were looking at?
Septic leach.
Right,
That was
yeah.
one,
Okay,
which I think they had it broken up into 3 tasks. And the first task was the water profiling, which we don't need them to do now. We're
Right.
doing it. We may need to do it on other wells, depending on how well 15. the
right,
outcome
of
well
course,
15.
yeah.
But task 2 was that long-term strategy of water modeling, which MWA may be able to help
Right,
with
okay,
too.
right.
So looking at all of that
Flow.
together,
Mhm.
and I talked to, and President Flynn, help me remember the name of the gentleman at MWA. You gave me his name a year ago. It's a really complicated.
Come on.
He's one of their newer employees. It's a really complicated name. Anyway, I spoke with him
He's a water engineer.
recently,
Mhm.
and he is very interested in working with us if we do end up working with USGS, but he asked to see the proposal too, because he wants to help us craft it and make sure it actually makes sense for
Right.
what it is we're looking for. So I guess the biggest question is that the board's going to need to determine is, what is it you want them to do? What are you looking for? And one of the things I know we've talked about is everybody asks how much water we have, and we use these old
Yes,
numbers and we don't
yes.
really know. So I think that's really important for us to
It is,
understand.
it is.
How do we manage something that we don't totally understand?
Finite resource, we need to know.
We need to know. So do we have thousands of years of water? We're paying $800,000 a year to recharge, but we
Right,
don't need right now,
right.
or are we falling behind? So those are the big questions I have in my mind.
Yeah, so are we truly in overdraft, right? That's-
Or are we in the opposite?
Yeah,
Could
right.
be the case too.
Really, that's crazy. But so is septic impact part of?
Well, so we do all of our own sampling, and right now we watch the nitrate level very, very closely. Well 10 is the one that's right behind the office here, and it has the highest nitrates of all of the wells. But it's still far below the MCL, so we're still good there. Our concern is from our west is there's a plume. And we know there's a plume of nitrates because Yucca Valley had that issue, and we have a basin here that goes to the east and drops in elevation, and water follows the same model underground. We do know that. So that plume could eventually reach us, and then we may have a nitrate issue. So doing some sampling at some monitoring wells would behoove us to see what's happening there, so we can keep an eye on it and make sure that if it is coming this way, that we strategize. Do we turn off well 10? Do we blend? There's all sorts of strategies employed, but I still want to be careful. This number I plugged in here is based on an educated estimate of what we think those costs would be, but we have to be really thoughtful, and they want to do the work, and their work is excellent, and it's very trusted, but it's also very, very expensive. So if we can do it for less and for the same quality, we want to look at that as well.
So is there a number in the budget for this best work on the water profiling?
There is.
Where is that?
It's in the project for the well
What page is
15.
that?
Sorry, it's page 35. The well 15, it's line 263. Well 15 repair rehab. There's 230,000 in there for this year in the revised budget, and 175,000 for 25-26.
And the profiling portion of that is roughly 60,000.
That sounds about-
I think that's
yeah.
about, yeah. So remember that cost is, we're doing a major rehab to a well. And that is the cost primarily in those 2 line items.
And the USGS work will happen over multiple years, so those future years aren't reflected.
That is the other, thank you for bringing that up. That is the other part. This task 2, if I remember correctly, was over several years. So the answers we want to get are not going to be, potentially in the very soon future. It's going to be really long term. So we can
So
find,
there'll be a line in the budget, next budget for USGS work.
there is already in this one.
Right, but let's say 26 or 27, 27, 28. So we can, so because what I made a note to myself to watch the video so that I can pull it, so I can recall
Sure.
what we said. And so that way I can bring those ideas later.
You make a great point. Yes, we would probably want to break that up budget
Okay.
over a couple of years.
Okay.
Yeah. All right, thank you.
Any other questions before we move on? Now, we are moving to the resumption or the continuation, if you will, of approved rate study rates and the options that we have. I want to start this discussion with a very clear reminder to everyone that we are discussing already approved rate study rates. We're not setting new rates that would require a new Prop 218 public hearing. We are talking about an approved rate study. The rates have been paused and we are talking about resuming those rates. So, and I'll start with apologizing because I know I didn't bring you enough information last time on this, nor did my recollection serve me well about what I had included in the budget. So I have much more detail for you this time. What is included in this budget, the revenues that are included in this budget, is option number 1 here at the top, which would be a 6-month delay of the 25-26 rates that were supposed to be implemented in January of 2025. And the proposal here is to implement them in July of 2025. And that would come along with, there is a loss of about $312,000 that falls mostly into 24-25, so it doesn't impact our revenues in 25-26. It really, fortunately, our consumption is increasing, and that may be a result of the meter replacement program, among other conditions. But so this option provides customers with 6 months of relief. It would come with a 9% increase in July of 2025 and a 9% increase again in January of 2026. This, however, is the smoothest path to get back on course. And it does provide just the customers an adjustment period. So they would have that first jump in July and then the next one in January, rather than just jumping up 18% to the new rate in January. The downside is that it would be a summer implementation, which is when the consumption is usually the highest. And so that can make it a little less palatable, but this is nevertheless the recommended and budgeted option. You can also see on my slide and in the agenda packet, or in the staff report in the agenda packet, the rates for an average bill. And this again is based on the approved rate study rates, and you can see what that increase is for each step along the way. The number 2 option would be delaying the 25-26 rates, the rates that were supposed to be implemented in January of 2025 by 12 months and not implementing them until January of 2026. That would result in a 9% increase in January, but it would be the highest revenue loss to the district, and it's also the least quantifiable. It basically extends, it skips a year and then just continues with the 2025 rates in 2026. So we fall a year behind basically at that point. About a $673,000 loss plus unknown future compounding there, about 54% of that loss falling in 25-26. And the third option, 25-26 rates are skipped altogether and we move straight into the 26-27 rates in January of 2026. This is the highest rate shock for the customers because they would although they receive a year of relief, they would then see an 18% increase in January of 2026. This is not recommended. Again, option one is what is budgeted and recommended. If we wanted to look at any other alternatives, that would require an adjustment to what is in this budget. So with that, I will ask for questions. I'm sure that, you know, this is not, it's a little bit confusing. There's a lot happening here with these. So I'm sure you must have some questions. Anyone? Oh, one from the public.
Have you ever considered a senior rate?
My understanding is that we are not allowed to subsidize in that way. So the question, I guess, would be, you know, we have these low income assistance programs and we have the CAP program, which is for leagues. And we just increased that low income assistance program from $100 to $300. So I think a lot of seniors would probably qualify under that program, and that is funded by our property tax revenues. Now, whether we could have a senior rate specifically that would also be funded by property tax revenues is a question that we would have to take to legal. But my understanding is really that's a subsidy that's not allowed. It puts a heavier burden on the other ratepayers, and it becomes much harder to quantify that, to pull that money out of the property taxes if it were allowed. It also, by the fact that the property taxes are pulled into the calculation when we determine the rates, those property taxes are already reducing rates, and anything we pull out and set aside for a different purpose would then result in an increase in the rate calculation.
Whack-a-mole.
Yeah.
So I just did a little search to find out that question. And, you know, under Prop 218, we have a lot of, I guess the best way to put it is handcuffing. There's not a lot of constraints there. And it says generally no, not using ratepayer funds if it's a cross subsidization, which would violate. So cross subsidization would violate Prop 218. Offering a lower rate to seniors that's not tied to the actual cost of service would make the other customers pay more than their fair share, which is unconstitutional under Prop 218.
Yeah, unfortunately, the electric company can do that. The phone companies can do that. They're private. They're not governmental agencies. And so they're able to put a lot of programs like that into place. Unfortunately, we are not. So.
Yeah, so it's almost everybody in this town is a senior anyway, so. Yeah.
So questions here, any additional discussion about maybe the recommended and budgeted option, which is option one, which would see us increasing those rates to the 25-26 rates in July instead of this past January. And then again, in January of 2026, we would be back on track at that point with the rate study. The least cost to the district, the most ability for customers, our ratepayers, to adjust from those increases with some time in between them, and 6 months of relief. They would actually see this, if the rate took effect in July of 2025, they would see that, I think I said in August, yeah, the August 31st bill, which would be going out in September. So because we bill in arrears, so they would not see that impact until the August 31st bill, which they'll receive in September.
Well, I'll talk for a minute. I'm a politician, I could do that. In some of these kinds of, you know, philosophical / strategic areas, I refer to the mission statement on the wall right there. which our mission is to provide, protect, and maintain Joshua Tree's water, our vital community resource. And we do that by applying certain specific values, which involve, I'm paraphrasing, integrity, transparency, respect, fiscal responsibility, and accountability. And that guides me. And what we're doing is we're not providing lollipops and popsicles and pizza to people. We're giving them a resource that keeps them alive. And there is no room for failure or ambiguity in our function, in our mission. And so to do temporary kinds of things, to change the rates, lower the rates, refund, whatever it might be, in the environment that we're in, with the regulations we have to conform with fancy science stuff, which technology identifies smaller particles of things in the water and all that, that we then have to consider taking out. And the repiping thing, we can't put things on sale or offer discounts, to incentivize different things like that in the non-governmental world. We have to do these things. There are rules we have to abide by, and following the rules and keeping the water safe, keeping the pipes reliable. It costs money, and the cost constantly goes up. Even the pipeline that brings the water down here, it's something like, 30 years old now, 35 years old. And the maintenance on that pipeline is built into the cost of the water per acre foot, and which, as Sarah said, is $800,000 for an acre foot. No, that's for our whole budget. It's like, yeah, I think I saw 776,000 someplace too. But everything costs money. It goes up, and a lot of what we've heard today, which has been recorded, and we have a bill here as a witness, was a lot about the thrift and the caution that we express in how we spend our money. And how can we get two for the price of one? Stuff like that. It's always that kind of a thing about how can we spend less to get the same amount of service is always a factor in this building. And if you look at the rate study, there's something in there that says that these incremental rate increases that we do year by year are designed to get us to a certain place in 5 years. And then that will allow us a capability to do many more of the bigger things. It wasn't the idea that, we would suddenly raise the rates a very large amount of money all at once. Because remember, boards in the past have declined to responsibly raise the rates because they get elected on saying we're going to keep the rates the same. They're spending too much money in the water company, and they're wasting it all. And when I get in there, I'll fix all that. We had a director who sat right here that was voting no on everything, almost everything, regardless of what it is, regardless of how important it was. He just said no, because that's how he got elected. He promised to do that kind of thing. So what happens? Deterioration in the system, and we're paying for that now. And and there's going to be fits and starts in this because we employ such a small number of people to do an extremely large amount of work, which is to replace 160 miles of pipeline at $23.32 a foot, unless it's changed. It's communities live and die over this stuff. People live and die over the availability of water, and communities do too. Just drive around in the desert, you find ghost towns all over the place, and part of that is because the railroad wasn't bringing water anymore to certain specific areas for the miners to use. So I would just urge the board members to consider carefully how we decide this issue, which we will do, I guess, in the next meeting, not in this one. This is just more airing of what the situation is.
If there is a consensus that something other than the option one, which is included in the budget, is desirable, I would need to revise the budget accordingly to bring that to the next meeting. So it would be good to have a consensus today, if possible, on what that option would be.
I say option one. Does this take a motion, Bill?
No,
Just, I know it's going to be, as Tom says, when we show up at the public meeting on farmer's market, it is filled with people that compliment you, and there are also people that complain about you. And Tom is right, 90% of the town is made up of older people that are really gonna be affected by this. And they would like to see something, Sarah, about the law, what you can't do. And it basically shows the spirit that you've gone through the exercise, you've gone through everything to do. No, you can't change the rate for them. And the reason why is because I think, you're doing everything you can.
Like message from the general manager in the newsletter would be a good way to do it.
And then generally put those kinds of things in the budget letter too, but I could expand that out into some other places. It does go in the newsletter, or yeah, it does. Each year Kathleen does do that.
Right, but that, I'm saying it'd be better if it came from you and had your picture, you know what I mean? And maybe it was a graphic or something like that, to expect people to plow through the budget letter. That's another thing that, where government makes things obtuse for people.
Mm-hmm.
So it'd be better if there's clear. I was gonna say video, but I figured you'd be hesitant about that. But I was just at this conference where they were talking about general manager videos, so.
I think it would be helpful for this topic to be addressed in the newsletter, especially also reminding folks that we are working within the parameters of an approved rate study. And, this is not, because I certainly don't want folks to feel like we've passed new rates without going through a proper process. This is a resumption of rates within an approved rate study.
Yeah, I wanted to make a statement about that too. So generally the rate studies are for 5 years. And we talk about them each year, but we've been in practice the last couple of years of bringing it back to the board each year. And I think the intent to do that was because of the different scenarios in this particular rate study that weren't in a previous rate study. So the previous rate study, the study was adopted. This time there was just A, B, and C, if you recall. And because you implemented A or adopted A but implemented C, each year we bring the information back to the board. And then you're saddled with having to almost remake that decision every year. And it's, I think, creating more confusion than clarity, because it looks like we're doing a rate study every single year. And in the past, that is not what we did. The rate study was done. It was almost a year-long process brought to the board. It was adopted, and then it was reported on as time went on. And so we might want to think about a different strategy of bringing this as a report instead of thinking that it needs to be readopted every single year, because it's putting you guys in a really tough position where you feel like you're having to remake the same decision over and over and over again. So.
Well, I have a few things to say. One is I seem to remember that we agreed to this price, but we were going to reevaluate it every year to see if the demands on the district warranted the increases. That's what I seem to remember, that
Increase to go to B or A, not to maintain C. C was was the least.
C was the bare minimum.
Bare minimum.
It doesn't fully fund
Okay,
the capital
okay.
improvement.
Right, well, you guys are all shaking your head, so I know if Autumn's shaking her head, she's got it. So, okay, so I had a few questions. So right here under scenario C, at the bottom requires 1.2 million drawdown of fund reserves. That's annually, right?
And it's within the, it's within the entire 5-year cycle.
Oh, that's just
Yeah.
that amount, okay,
Yeah.
yeah, because that was a little bit confusing.
Mhm.
All right, so, I was never happy, well, anyway, I see the general manager's point. Because what I'm doing is I'm having angst again about this, and I've had it before, that the fixed monthly fee is now gonna be $52.70 in 2027, so, but here we are, I just, I don't want us to do this again. The monthly water flow charges, and again, I can't remember. Are we legally constrained on how much like tier 4 could be? Or could that be higher?
No, we are constrained to cost of service. So every
Okay.
rate has to be supported by cost of service. And so even within the tiers, there are additional costs that are factored in, such as peaking of power and water conservation efforts that have to be undergone for those who are using more water.
Okay.
So it does have to be supported by cost of service. It can't be arbitrary.
And none of this is related to how much water we think we have in our reservoirs or anything like that. There's no connection
Well,
to that.
the only connection is that it does factor in a certain amount of recharge.
Okay, so,
So-
right, so if we recharge less.
The
then
rate
with it-
study,
okay,
yeah, the rate
alright.
study actually factored in 1,000 feet of recharge, and we're doing 1,300. So we're doing more than what the rate study
Okay.
factored in. So, that would actually, if you calculated that out, that would make the rates higher.
Yeah, yeah, well, we get the point that this was approved, and if we didn't get it, we have a little graphic up there that says approved 3 times. Made me laugh. So anyway, but, and when you say average bill, I may have asked this before, but I'm just double checking. Is the average bill, the average of business and residential meters, is the average of all these meters?
It's the average of all customers.
All ratepayers.
Yes.
So therefore, the average where it says 114.50 or 128, I can't read these numbers, I have to turn away from you guys. 120, yeah, that's for all meter sizes, right?
Yes.
So that's not saying that, the average residential ratepayer.
Sorry, that is, I should have been more clear about that. That is for the 1-inch meter. But the eight units average is among all customers. And so
Yeah,
for the 125, that would actually go up I don't have a schedule for a larger meter, but that is the majority of our customers, 3/4 or 1-inch
okay,
meters
all right.
would fall under that.
Yeah, that would be
cost.
good to be clear. I love this. This is a very beneficial table, and I appreciate you doing it. Yeah, so anyway, yeah. And and I think that maybe we erred in, not implementing this in January, because here we are. We're gonna have, the July uproar, and then 6 months later, it's gonna be the January uproar.
But I'm sorry, yeah, go ahead.
My understanding is that we do need to notify again
Yeah.
before we implement the next level. And so that's why we brought it to the board, but it doesn't necessarily need to be brought as something that needs to be decided upon. It can just be a informational item.
Yes. So
Yeah, meaning that they're not gonna all show up at a board meeting because it's not gonna be
It's not a
noticed
public hearing.
as, right, yeah, I understand that. Yeah, I just meant the uproar, when
Oh, I hear you. Yeah,
we, converse with our ratepayers.
yeah.
we understand.
And the pain that they're gonna.
We're joining yours too, and we understand that. So I think the things that we need to talk about is how do we do this going forward in this particular rate study?
Yeah.
So that it's less burdensome on everybody. And then second, I don't think it was necessarily an error. I understand, I think we all understand where you're coming from.
Yeah, hard.
And
Yeah.
there's that, remember the sunk cost fallacy. Are we doing the right thing? And did we reevaluate appropriately? So here we are,
Right.
made, a lot of headway in learning, does this make sense? And I just don't think that we need to do it every year over and over and over to the degree we have, because it's just creating a lot more strife than helping. That's
Yeah, yeah, thanks. And I think one thing I'd just like to understand, and this is hard, and it seems like you guys have an understanding of what we really have to do as far as maintenance of the system. And how much progress did we make? I know that we fixed a lot of big leaks, and it's just hard to understand what really has to be done. And you guys always look at us very seriously and, you know what I mean? So I mean, I understand you've done your work and everything, but at the same time, it's hard for me to grasp and to be able to communicate to people, you know, the urgency of this. And then my concern is, you know, as time marches on, you know, we're gonna just do 9% every year, you know what I mean? And it becomes a fortune. And especially when people don't understand, you know, why we have a basic monthly fee and why our water is so much more expensive than our neighbors. And people, they feel like they're getting the shaft somehow in Joshua Tree. So,
Well, I think we can do a better job at trying to describe these things in some sort of flyer or newsletter. I think we can
Yeah.
definitely do that to
I mean,
help.
I know
Is that
Kathleen
right?
and Tom, you know, being at the farmer's market, you know, have to deal with this all the time as well. So I'm sure that they have some good language.
There is, I mean,
Yeah.
there's a lot to describe and the complexity of a water district, it just seems like, oh, just go do your job, it's easy.
Oh, yeah, no,
Complex.
it is. And people don't understand the reporting and those mandates and.
And the state is really pushing this down, where what I would like is
Testing.
people that are coming to complaints, I'd like to take them on a field trip and go meet the senator.
Yeah.
And go meet the assembly members that we met
Yeah,
and understand that they're the ones that are pushing down this legislation that
Yeah,
we can
right.
implement, and they're not thinking it through because they are not boots on the ground.
right,
They don't know what the impacts are, and then we
Right.
have the impacts, and we have to go and fight it on the back end. It's.
Which costs money too.
Which costs money too.
right. And I have several things to say about that in my director's report, but one of those is, again, and I've said it before, the board are the ambassadors for the district. And I think a lot of that has fallen on our excellent consultant, Kathleen Radnich, but that's why we have to be a little bit more in the public's eye with our branded clothes and be speaking to them more and be better prepared too in what we say. And anyway, so one of the things, I'll just mention it right now, just because it's related to that, is I participated yesterday in a presentation on grassroots advocacy. And I want to come to the district and present to you guys what I learned, and for us to think about it all together and how we're going to deploy the board better, and how the district can be more, you know, back up and be a little strategic about when we're needing help from people, our allies. Because that's related to this as well. All right, that's all for me, thanks.
And staff, I know you recognize this, but I think it's just important to say, we've done a really huge job in this particular budget to reduce costs where we can. I mean, it's just, we've had to make some major sacrifices that we think are going to be okay. I mean, the accounting technician, the office assistant, so we purchasing, which a lot has to do with capital improvement or pipeline. So a lot of that should be shifted out instead of in, so that should help, but there's a lot of sacrifice made in this, and it doesn't mean that next year we're not gonna come back and say, okay, this worked or this didn't work, but we think we'll be okay this year, going forward. But it really took a lot of effort from everybody to see how can we run this the most efficient, and slim really as possible.
I'll just throw in my 2 cents on it. Yeah, I think one of the things we have to do as a board is kind of find a balance between the needs of the community and the needs of the district. And I thought, you know, rate scenario C was the ideal kind of compromise on that, and I think it's been working. So, and obviously we're gonna need to do some outreach on this, but one of the things we could point out is by giving them 6 months of relief, we saved the community $312,000. So that could be a pretty strong talking point to use on this. Another thing, I know I brought it up before, it said the video couldn't be found, but that YouTube video for the rate hearing would be very nice to have online.
We don't have it?
That I can't find
We
it.
can't find it. We had a Zoom got backed up, and that was the one video we can't find. We have the meeting, we don't have the workshop part.
Because I think the community really needs to, that would really do a lot of work to inform the community of exactly what we on that day, so.
Yeah.
I'm-
For really important meetings, we have an audio backup in the future. You know,
Yeah.
somebody can back it up on, somebody can record it on their computer sitting right here.
Yeah,
So it's an expense that'll have to go in the budget then.
No.
Backup?
No, an audio backup? No, it sits on their laptop. And we just keep it, you know, for a period of time.
It's not a bad idea. We
Yeah,
can find
if it's
some way.
Just for important, I'm just saying for, you know,
Hearings.
really acute meetings, yeah.
Right, yeah. That's very, very frustrating.
Mhm.
Well, too, we've also, we did have, as I recall, there was a discussion about whether or not to have the second meeting, and one of the reasons, workshop. And one of the reasons I was in favor was that it's another opportunity to expose all of this stuff to people, ratepayers, and also demonstrate how concerned we are about the expenses and relative to the rates and all that kind of stuff. Ultimately, we can not ever fail in providing the water, and that requires a certain level of insurance, and that means some safe money in the budget and in our reserves too.
Well, I guess, you know, then I would say that we're gonna have to go with, you know, the recommended, as far as I'm
yeah,
concerned.
option one.
Yeah,
I'm leaning that way.
all right.
Well, there's more time to, in a future meeting is when we're gonna do the final vote. So when we hear more, maybe from the staff, from the public and stuff like that, it may hone your reasoning for what you want to do.
Right, but what she was saying is if we chose one of the other options, she was gonna have to
Revise the budget.
revise the budget, and so, yeah.
Was organic. In the sense that we had a crowded agenda and we.
That's true, you're right, I
And
forgot
that's
that.
and then came the consideration, we still don't know what's gonna happen to our general federal economy situation. As much as we know a little bit more, not much more. And I gotta remind myself that half the people who were, well, probably less than half the people who voted, you know, for this situation to be in, they're probably resenting their vote. A lot of them are resenting the vote right now. Because, you know, I just went to the convention that I went to, and it's like, well, it's not all bad, but it's pretty bad as far as all the water, federal level stuff coming down.
Yeah, that's very concerning, the Clean Water Act and all that sort of stuff. Like I posted on Facebook, you know, 8 years ago, whatever it was, 6 years ago. I thought we'd all agreed that clean water was something, you know, we wanted in 1972, you know, or whatever. You'd be debating it now, or to re-rolling it back. Oh, go ahead. Pollute our water, it's cool.
Well, I'll just mention again the article that I shared earlier, which does recommend that we not fall or rely on reserves to avoid making difficult budget decisions. That would be my reminder to keep in mind, because we certainly are looking at uncertain economic times, and we don't know what's going to happen, and that's when we need to build up our reserves and our revenues as much.
So where does the money, the extra money we get in property taxes, because of the increase of STRs in the last 4 or 5 years, STRs have increased our property taxes
Yes,
immensely. And so we have a gain of what, was the $900,000?
yeah, it's about up to $1 million.
Where does that money go?
It's part of the general, all of the money coming in, it's part of the general money coming in, all the revenues. And then it's used in calculating the rates that are in the rate study. So in other words, if we didn't have those property tax revenues, these rates would be higher. It brings those rates down. It actually brings those rates down, and we just carved out that small piece that we use for the United Way low income assistance program and for the cap. So
The rate study was done, what, 3 years, 2.5 years?
yeah,
So the property taxes are still escalating.
yes, they were, yes. Yeah,
That's a good insight, something I hadn't thought about or
so our costs.
understand. Oh, no,
Right, yeah, costs are escalating as well, and we have to keep those, or ideally, we need to keep those non-operating revenues equivalent or higher than our operating expenses. And so, you know, we can't even consider those other types of revenues in that balance. Those other types of revenues are not recurring. I mean, we can rely on them relatively well, but you know, if something changes in the state landscape, I understand there's some discussion right now about repealing Prop 13 and increasing property tax. You know, they could go the other way. We don't know what's going to happen with property taxes. We have no control over that. We have no control over the values of the properties. So we can't rely on that money as part of our operating revenues. It's non-operating revenue. So, I'm sorry.
So the non-operating revenue, property tax increase that we gain is not counted as operating revenue.
It is not an operating, it's a non-operating.
So it's not figured into the rates.
Predictable.
It is figured into the
yeah.
rates, but not the full amount that we are getting today because that has increased. But neither have the expenses that have increased. So those are not necessarily figured into the rates either, because this is a few years old. So the further you get in a rate study, the more out of alignment the revenues and the expenses will be.
Yeah, and that was part of the correction of the pause, is that we were having more money coming in through the property taxes. And so.
But that was just a part of the equation. So part of it also related to the fact that we underspent in the last fiscal year and maybe a little bit, you know, further back than that because of circumstances that occurred at the district. And so we did not reach our expense budget, which is normally a good thing, but that's a temporary matter. And that's why our revenues and our cash balances went up so significantly, because we did receive additional property tax revenues. We did receive additional interest revenues because the interest rates were good. And we also spent a lot less.
We had a lot
than we
less
anticipated.
projects.
Yeah. Yeah. So it was a multi-factor.
That could be something that happens this coming year as well. I mean, if we have several positions that we need to hire for. And without those key positions being filled, it could put a slowness on some of these capital projects. You know, we have to have a solid director of ops in that role to really help move these along. I can do as best as I can on some of these, but it's a lot to manage, you know, solo. So that's a big concern for this coming fiscal year. We're holding out hope. There's a magical unicorn out there that wants to come work here.
But we are looking at a significant drawdown to the reserves and the cash balances as a result of the capital budget being about double or maybe, you know, a little bit more than what it normally would be. And so that's in response to a concern, or, I mean, those are all needs that are absolutely, you know, non-negotiable for the most part, but those balances I know are of concern to the board, those cash balances being as high as they are. And so, you know, dipping into those with a reserve drawdown feels like a good compromise at this point. And those are needs that we do have in the district, which is different than just reducing our revenue intake and still not performing any of the maintenance that needs to be done. So, you know, if we're just reducing revenue, we're not performing the work that needs to be done. Yeah. In this case, we are using the cash balances to do that additional work.
Well, I'm starting to use this expression. You can't tell the length of the train by looking at the locomotive.
Is that an expression really, or did you make that up?
I made it up. I'm a politician, I make a thing.
I think I read it conclusive about what, 15, 20 years.
What?
Cabooses are no more.
Oh, right, yeah, okay, right, yeah. I love the caboose, we all love the caboose. Yeah, no, you don't see them
I
anymore.
know it's obsolete.
Yeah.
We might need to bring it back since there's been so many train robberies.
Yeah, yeah.
Train.
Well, the idea.
Down below, there's train robberies.
If, because they had air brakes, if there was any break in the line, then the rest of the train didn't have brakes, so that was. But now that they have electronic and Wi-Fi and all that, they figured, well, we'll just. Don't need a caboose.
Wasn't the last accident the Waldorf cannonball going over the hill here in San Bernardino?
And they've had several, they call home pass.
But he was saying the last one.
Well, okay,
You know that.
Okay, so what I'm hearing,
the consensus is
Number
1.
one.
Proceed with fine tuning to number 1.
all right, thank you. And, you know, when we bring this, I'm not quite done yet, but when we bring this on June 4th, there's still opportunity, of course, to discuss any of that if concerns come up. So I will,
In particular, here in public concerns.
absolutely, yeah,
We're always saying, come talk to us.
yeah.
Be a witness to all of these kinds of things.
Absolutely, absolutely. So let's talk about cash balances. So what we are anticipating here is that our cash balance will decrease from we were at about 23,162,000 down to 22,923,000. And that's an additional reduction of $273,094, again, related to the salary changes that were made after the packet was printed. Questions on the cash balances? Projection? Okay. So bottom line and final thoughts. This is what we're looking at for 24-25. We do have expect net revenues of $2,030,463, which when we look at it over the 2 years, is what we have in the little box in the middle. But with this scenario that we've included in the budget, we are looking at a drawdown for 25-26 of $2,270,227. And over the 2 years, when you combine that net revenue with the drawdown, we're looking at cash reserves to decrease by $239,000 to $22,923,199 by next June, and $17,231,000 is unrestricted, I should say, unrestricted but designated. So it's not the legally restricted portion, it's the designated portion. And operating and cash flow reserves are projected to cover 6 months of operating expenses as required by the reserve policy under this projection.
When you're done. So, but 22 million in our reserves. And you say operating cash flow reserves, but that's not just operating and cash flow reserves, that 22 million, or do you consider that?
That's everything.
Okay, so, but 6 months of operating expenses is how much?
Oh, so it would be, so it's a, we have the operating reserve and the cash flow reserve, and each one of those are required to have at least 3 months of the operating expenses. So whatever that operating budget is, that operating expense budget, we need 3 months of that in the operating reserve and 3 months in the cash flow reserve for the 6 months in total. So it would be a quarter of, right? Let's see. Maybe I have to. Let me find the combined total here. Okay, so here's our combined budget. So this is a year's budget, sorry, this 9,590,000.
Mm-hmm.
That's a year's budget, so we would need half of that in those two reserves combined.
Right, so when you say that, it makes it, when you do that, put that on the slide, it makes it look like that amount is what we need. You know what I mean? That's the 6 months. And it's not the 6 months.
Well, that is just in reserve in case for some reason.
No, I know we need that.
Revenue stopped coming in,
Yeah.
and we had to rely on reserves. We need to have at least 6 months
Absolutely,
in
it's
there.
for that.
I think
No.
at the bottom it's a note, it's just a reminder, don't forget.
Right, I know, I remember that. It's
Oh,
been in a
yeah,
couple.
in the green.
It's been in a couple places. Yeah, I don't forget that. I remember that. But I'm just saying, if somebody else were looking at this, when you put it there, it makes it look like that 22 million is the 6 months of
Yes.
operating
Oh, I
expenses.
see.
And
Okay.
so then I was asking, so if half of, let's say it was 5.5 million, let's just say it's 6 million. Let's say it's 6 million for that 6 months of operating expenses. So then it's like 22 million above the 6 months.
Well,
a lot.
Right, but we have the emergency
I know.
reserve in there and we have the.
Maybe breaking it out this way would be easier.
Yeah,
Yeah,
I know what it is. I'm just saying that when you look at it like that, it's wow. I know we have I'm not saying that we don't need, I don't know, I've always struggled with that because when I came here, we had half of that, 5 years ago, and now we have twice the amount in our reserves, and it's like, what do we really and truly need? So
yeah.
I know that we need the 6 months. I recognize
Yes.
that. I know that we need the emergency fund.
Yucca Valley has $80 million.
Oh, that's a good point. Yeah, wow.
Of course, they have sewer.
How did they have that? Yeah, wow.
Well,
I thought they were
that's
broke. Oh, wow.
Haven't heard of
I
that.
wonder how much 29 Palms have in reserves.
I think they have about 7.
Yeah, they're small, a lot small. I mean, I just remember when General Manager Van was here, when I first came out, how much do you think we need in reserves? I asked him, he said, 6 billion. Anyway.
I don't agree with that.
6 million. And that barely covers our legal. Reserves.
Also remember that 29 Palms doesn't have the same sewer piece of it that we have in our restricted. So there's, it's not apples to apples
Yeah,
necessarily.
Well, and also revenue from the ratepayers, if the earthquake occurs, which is overdue. The revenue from the ratepayers is probably gonna stop for at least 2 months too. Gary Sturdivant said that it's gonna take us probably 2 months to get utilities back online again if the big one happens.
Really, just 2 months.
And we're in the red zone here,
Please don't let me in the summer.
Oh, God, no.
or in the winter.
Yeah.
There's no good time. We don't want that.
All right, so I'm right. Prepared. So just I thought this was an interesting quote here. Used correctly, a budget doesn't restrict you, it empowers you. And so just a reminder, this is our Bible. We work by this on a daily basis, and it is a tool that is very important to us. Staff recommendation here, please remember that rates are the primary source of funds to sustain the district's operations and commitment to provide large to the community. Staff will recommend at the next meeting, when we provide that recommendation, that the 24-25 revised budget and the 25-26, what we were calling the outsourced pipe approved rates, we'll rename that since it's the only scenario that we're bringing now. We'll recommend adopting those two, and this will put the district back on the approved rate studies path, using scenario C, and provide needed funding for ongoing capital replacements while maintaining adequate cash reserves for emergencies and other purposes. And so the request here is to please continue to review and comment on proposed budgets and decide on a rate continuation / resumption option, and that's what we've already talked about today. So I think we're good there. And with that, any other questions or discussion?
Hearing none, this workshop is concluded at 11:35. And at 11:35, the special meeting is back in session. It's convened here as we did last time. Item 8, reports and comments for informational purposes only on subjects not covered by the agenda. The opinion of the individual and the record are not necessarily the opinion or district staff. No action will be taken. The board may provide staff with requests for future agenda items. Director reports, Vice President Doolittle.
So I just, last night, 10:30 at night, I returned from the California Special Districts Association legislative meeting in Sacramento, and Director Charlesburg was there, although she's absent from the meeting today, and General Manager Johnson was there as well. And we mainly, it's interesting what they have you do. They have us all get together and then they hammer into us, CSDA does, the things that they want us to talk to the legislators about. So I kind of thought we were going to get to go and just talk about, chromium and unfunded mandates. Those are big things for me. But so, and the things that we talked about were things that I'm sure that they, in the aggregate, reflect most of the special districts. And so one of them was safe and clean fleets. And we were telling the legislature that we need some help in complying, and that this bill, which is 496, will help us to do so, which is to, very much being able to rely on vehicles in an emergency. And right now, the technology is not there. And the legislators that we spoke to, we spoke to a rep for Castillo, and then we spoke to, what was her name? Ocha, something Ocha.
Ochoa.
Yeah, how do you say her name?
Ochoa.
Ochoa, okay. And then we also spoke to Wallace, and they were all Republicans, very, very amenable to what we had to say, and very concerned, and they agreed. They seemed to, one of them said that the technology is not there, and the government, California, keeps putting things in place when the technology isn't quite there. And I think that's just a strategy to get businesses to come ahead with that. And then the other thing we talked about was the sunset extension for the alternative Brown Act procedures, where they're extending the sunset date to January 1st, 2030 on those provisions related to facilitating remote participation for just cause or emergency circumstances. And they all said that seemed to make sense. And then the last one, which doesn't have much application to us so far, is CSDA was having us ask the legislators for flexibility on contracting services, where labor unions are wanting agencies where they exist to give them more notification, a longer notification time. So they wanted 120 days written notice before issuing an RFP or RFQ, which is really problematic if you have an emergency thing and you need to hire contractors to do it. They're wanting the focus to be on the workers that are already there to see if they can do it. So, and then they wanted 30 days on the back end. So it's really, give the contract 6 months of just administration. So that was something else that we talked to. So it was a really good experience. Just what I wanted to say is that regarding the grassroots things, I just want us to talk more about that. I really want to come and talk to you guys and spend a little time going over what I learned, so that you guys have that learning as well, and consider being a little bit more strategic in some of the things that we do. I think we're doing it. I know that Kathleen does a whole lot that would fall into this as far as creating allies and grassroots allies, but maybe getting that not exposed, but understood actually what she's doing and listed somewhere, and then adding to that as far as who our allies are and what we would go to them for, and what the contacts are doing. So, and there's a template and things like that. So anyway, I'll be contacting you set about that. I wanted to say that I recently received a scam notification from Spectrum, and it was a postcard telling me that that my password had been compromised, and that I needed to call this number and talk to them about it. So what I did is I called Spectrum, the number that I had for Spectrum, and the customer service rep said, no, absolutely not. That's not what happened. And it looked so official, and I could just see someone, calling the number on there, and who knows what information they would have asked me for. So anyway, I just wanted to flag that for you guys. I know, concerning, huh?
Did you know it was a scam?
I just suspected it. So
You
I just,
assume.
well, because for them to send me a mail item saying there was a problem with my password, usually you get an email or something like that. So I just thought, so I thought that's wrong. So anyway, but it certainly looked real. And lastly, I just want to say I've noticed the maintenance of operations in my neighborhood where they're painting. What are the things, what are they called where it says water and it's in the road?
Those are valve can covers.
Okay, I thought it was. I had valves right here. So that they've been painting those and the water hydrants and it's nice to, I mean, the emergency fire hydrants. So anyway, it's nice to see that part. That's all for me.
There's a big job there too, because I think we have 1,400 of those fire hydrants and stuff, and we have to test them now and give the report of our testing to the state, I assume.
We do talk about water loss from the fire hydrants, and valves have to be turned. Our goal is to do the entire district, turn it over every 3 years, and we come back through and turn all those valves again.
It's huge.
It's huge.
Director Fick?
Okay, I did the Monterey convention, the Aqua convention, and the first time I've been in downtown Monterey, and highly recommended the hotel that Lisa found for me, because I went in a little late, so she put me in the highly regal Monterey Hotel, which is 1904.
Oh, wow.
And it's centrally located. It was the best one there by far.
I want to say that.
Highly recommended. And so, and then just a side issue, it's a novelty. On my drive to there, I drove to and from, and I was on Highway 58 going westbound, and I just made the curve to go up the Tehachapi Summit, whatever pass, whatever that's called. And that's when I was almost hit by a San Bernardino County van, which left its lane and 3 feet into mine, missed me by that much. I caught up 20 minutes later and got a photo of the license plate, but I don't think I'll get far with the county as far as that goes. I can't afford it. I mean,
Yeah.
So, if I wanted to bring it out, I could, but that was the incidental thing. And I got there, and I'd say about 3/4 of the vendors that were at the convention did not apply to us. I mean, they're banking people were out of, well, they did have one was a fence system that had, high security concerns. But most all the vendors did not apply to us as far as that goes. So, but I did talk a lot to the Delta people, water supply people, and the borer people. The borer for the tunnel, or the $20 billion tunnel they're trying to do. And that was not only because he just announced it during that water convention that he was trying to somehow expedite it, the 20 billion. And for that one, what they're doing is they don't have it yet, but they have to get 4 huge 36-foot borers, probably from Europe, that are going to do the tunneling, 48 miles of tunneling, and it's to get the headwaters of the Sacramento River more directly to the state water system. And so that's why they're doing it, and that's why they say environmentalists against it. I'm an environmentalist. I don't know if I'm against it or not. I have to understand what's going on. But so, and then it was more of a scientific research when I went to the convention, and I dealt with Rockwell that was doing the hydrogen oxygen separation of water, kind of like what Cadiz says they're doing, except for Rockwell didn't even know Cadiz was doing that, but Cadiz is doing it from a Spanish group, remember, right? So in that situation. And groundwater, I went to a lot of these classes or seminars, if you want to call it. And unfortunately, a lot of the groundwater was concerned with the greater basin, what do they call that? And the Grand Valley, San Joaquin Valley. That's where most of the specialization for the groundwater concerns are. So it didn't really affect us in that sense. I also noticed, just to sidetrack, that there are now industrial solar panel installations on my drive through Bakersfield, going west of Bakersfield. They're now starting to put in solar panels into fallow land that's been abandoned. And then of course, as I drove north to Monterey, it increased in some of the crops I couldn't identify, but a lot of them was grapes. winery and stuff like that. And so, one of the odd situations was the first keynote speaker that they had was a water distribution lady out of Atlanta. And of all the things, she mentioned two communities in California. One was San Jose, where she landed, and the other was Joshua Tree. I don't know why it came out of the blue. I think she wanted to visit it after she came out here or something, but that was a concern. I didn't talk to her.
What was she saying about Joshua Tree?
She was just mentioning communities in California.
Oh, she just used that as a, oh.
Yeah.
There's something that,
And then probably the most highlight of the whole thing was the very last lunch at the okay, this convention is Tuesday, Wednesday, Thursday. Thursday afternoon, there was the last luncheon, and everybody, you know, it's when these conventions happen, there, by the time you get to Thursday afternoon, which is the last part, everybody's clean. I mean, it's okay. So anyway, the last luncheon, I was sitting at a table and I sat down to a former lawyer and current Monterey County Water District. I didn't talk to her too much about that situation, but oddly enough, and the thing is, it's one big round table, and oddly enough, Kathy Green and her associates.
vice president, former other president.
She's now president.
Yeah, Aqua.
Of Aqua. And what happened was this nice lady that I was with, we talked a bit and then she left, and then the guy who was next to her left, and then Kathy Green, the vice president, and their handler, I guess you'd call it a handler, were there. And so I had the
Wow.
option to, well, what was happening was she'd been up there since 2:30 a.m.
Oh.
So she was nodding out 3 or 4 times. I mean, she nodded out 6 or 7 times.
Oh,
but
no.
twice she was.
Oh.
So I felt,
Bless her heart.
I got to immediate left in case, or she had the vice president on the right and I was on the left in case she went one way or the other. So, but you know, she'd been up for 4.5 hours
Yeah.
and she was the center of attention and coordinating all this stuff. So that was my concern. And then when they're finally, at the end of the luncheon, and this was a kind of boring because it was a bunch of losers in the sense that they had a competition for the most innovative water district going on, and 6 of them. And it was an explanation of an extended explanation. That was the luncheon situation. So she knew all what was going on and falling asleep and all that kind of stuff. But after all that, I then was able, and she was cognizant of talking with their vice president and me. And I was putting in a good word for Joshua Tree and our problem with the Chromium 6 with her. And that's when she gave me her card. And I talked to the vice president. He noted the Chromium 6 situation too. So I was able to make some impact for Joshua Tree there. And the drive back was uneventful.
Yeah. That's the best kind.
Director Short.
Yes, President Flowen and I attended a emergency preparedness at Copper Mountain Community Center. When you set up a booth up there to talk to the folks over there. I don't think we get out there enough. And, one of the things that came up quite a bit was the consumer confidence in the water. We kind of hit on it earlier today. People were concerned about, you know, PFAS and stuff like that. And one of the concerns was that like people don't drink it because they don't like the way it tastes, which I thought funny, but and I drink it. So I'm just kind of curious if there's any ways that we can help improve people's confidence in it. I know we send out the report on it every year or so.
We can always add water quality to our newsletter, and the consumer confidence report is something we have to do every year. And it's, we find it a little bit frustrating because we're very limited in what we can add to that document or what we can edit. The EPA puts the requirements, the state puts the requirements of what has to be stated. You can't even change the words without now not complying with their requirements. So the document's very pretty, costs a lot of money put together, and it still doesn't serve the purpose that we love, but we have great water quality. I think that's something as board members, you can tell people
I say it all the time.
we have great water here. The MCL for the Chrome has changed, but the water has not changed. And it's the same water it has a long time. I'm gonna follow up on the microplastics and the PFAS, just to be sure. But I do know that the EPA has pushed down what is called UCMR5 testing, and I believe that covers the PFAS. And I was messaging our water quality specialist while we're in this meeting, trying to get that information, but I don't have it yet. But nevertheless, we test all the time. There's sampling that happens every day, from sampling for contaminant level to chlorine level, and it happens all the time. And we we have an entire person dedicated to just water quality, a water quality specialist. So not a lot of districts have that, and we do. So we really do take water quality seriously, but we can definitely do a better job of getting that information out in a newsletter.
Just as a follow-on to that, I would like to know in the future if any of the maintenance we're doing would help with the water softness, like, because as I said, I drank some directly from a well before it was treated or run through our pipes, and it's so much harder by the time you get it. And it was just wonderful drinking it like that. And that would be great to know, is if the water quality would improve with the pipe maintenance sometime in the future.
Good question.
Yeah.
Well, the taste of the water is driven a lot, well, partly it's chlorine, which I've only tasted in the water once in some 55 years. But it's the minerals, and we point out at the market and anywhere else we can that the minerals is where the flavor of the water comes from. And the last thing you want is to drink something that's the equivalent of distilled water, which you could buy at Stater Brothers. If that's some of my wisecracks about it is that I would tell people that they go anywhere and complain about the quality of the water as a health issue, and then they go off and order a pizza or some cheeseburgers and
Right.
stuff like that for lunch. You know, they will complain about what's injuring them there. I point out too that partly as a joke, but partly as a truth, and that's what put me in the emergency room was pizza and cheeseburger. It wasn't the water that I'd been drinking for a half a century, for crying out loud. They laugh about that kind of thing.
I think we're also battling a battle of what bottled water did to our society, and teaching us that, tap water, we all drink out of hoses. We grew up okay. So we're now battling that industry who has sold us that, bottled water is better.
Pure.
Smart water, but.
Kathleen is
That's
asking,
smarter.
that would say it's not just our pipe, but it's the old pipes that lead to the homes that can change the taste of the water.
That's
as
an
well.
excellent point. And I was talking actually to another general manager at this conference about that. And he said that where they're at, the water's great, but he doesn't drink it out of his home because his home was built in the 40s and it has to be repiped. So the age of the home does make a difference on the water quality. That's true.
Yes, and I also bring up, I'll ask, how old is your hot water heater? Are you drinking water from the left side of the faucet? That's going through that 20-year-old hot water,
Eroded, yeah.
which has pipes in it, circulation pipes that are designed to continually agitate the water in the tank so that it doesn't build up as much sediment in it. So, there's all sorts of questions as to why people are picky about the water, but
Josh Basin Water District was winning national competitions in 95, 96 before it chlorinated. And they had Claudine Diaz, who was town manager from JBWD. She was the one who started chlorination.
yeah.
And was that based on a requirement from the state? I imagine it would be.
I just heard at this conference that evidently DHS has really great tasting water. And I'm like, why is theirs better than ours?
I'm not sure, but they do go to competitions and they have these water sommeliers that drink,
Water sommeliers.
the different waters. So that is interesting. I've always wanted.
I thought it'd be fun to do that up here, a competition between us all, but then I thought maybe that wouldn't be good, so I don't know.
Yeah, I don't know if it'd be friendly competition or not.
Yeah.
So I was over at the Landers Homestead Valley Association on May 12th. Director Jane went with me. She drove actually up there, which I appreciated. And a relevant, semi-relevant thing, because I think for pipeline commission meeting, the directors are gonna come down here, we're gonna host that. Well, and then occasionally, I drive up there to NWA for their meetings, but starting on 4 days ago, on May 18th, construction rehabilitation started on Highway 247. Fortunately, the work is gonna be between 9 PM and 6 AM, so unless there's huge backups, potentially because they're moving some monstrous machine on the highway, which I see that a lot now on 247. It may, it shouldn't be a driving factor for when we're coming and going from MWA. I also attended the, well, I should remember it was last night, the Rotary, or yesterday, the Rotary meeting at the college, similar to the one that I forgot about. That's you went to.
Covered it, no big deal.
It was already on the calendar though. And it kind of aligns with something that you mentioned about some of the
Grassroots.
other resources
Yes.
and stuff. And they, Kathleen mentioned to those folks that they could be ambassadors about water for emergencies and stuff like that, because we push that pretty consistently about the problem of the earthquake happening anytime. And the window opened in about 1940 on average when the big one happens. But they're a very friendly group over there, and I noticed too that they've got an area in this, I don't know what kind of a meeting breakfast room, there's a kitchen in there and stuff like that at the college. And there's a space there where people put different kinds of portfolios or information, pamphlets and all that kind of stuff. And our water quality report was there. And I suspect that was because of Kathleen. But that I think is about all from me. So we can, unless there's further.
There was something I was gonna say, but now I can't remember it, so. Oh, Bill.
Yeah, so, I used to be the president of the Chamber of Commerce. The Chamber of Commerce right now is defunct. And we have two signs, one into town, one out of town. And the town sign into town is starting to deteriorate. The water department at one time contributed the water to the roadway frontage to the shopping center.
Yeah, I call it Tortoise Island, but yeah.
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 And I was wondering if somehow the water department might take those two signs over at least to,
Let's say again, repeat that part.
they need to be repainted.
Indeed.
Well, I know the Rotary Club did the tortoise last year. I don't know if they would do this. You're talking about the welcome signs?
Yeah. You know, well, unfortunately, they say Chamber of Commerce, I mean, they
Right.
don't say Joshua Tree Water Department.
Mhm.
There
Yeah,
is,
that's not a bad idea, actually, putting
Google
JBWD on
that,
it.
yeah. Have to look it up.
there is some sort of a business association that's forming again.
JBWD is.
He's on it.
Yeah, Sarah from the Country Kitchen is listed on it also.
Mhm.
I know
They're
that.
working on their bylaws, they can probably address it probably in about 3 months or so.
Yeah, I think that's a good option.
Kathleen says she has some connections with the artists, maybe she can get them to take it on as a project.
Yeah, you know, we're fairly close, our booth is fairly close to that Fertile in particular, and it is popular. We have people walking around our booth and around our cars and stuff to access the thing so they could get the pictures
Mhm.
taken. I also noticed too that there's some sort of minor construction going on at the I guess it's the Joshua Tree welcome sign that's halfway between here and Yucca. Or some sort.
I'll talk about that.
Okay.
Good.
So along those lines, then why don't we go to the general manager's report?
I'm trying to keep it brief because I know everyone's probably tiring out. First, I'd like to say, well, actually, I might end with that. Let's start with the construction by the line out there. Hold on, Lisa.
Okay.
So the construction out by the sign and Joshua Tree was a subcontractor of Caltrans. And they were putting in a post for what I understand is a billboard. I don't have full confirmation of that, but that's what we've been told. And the hole bore that they drilled,
Uh-oh,
they did not call dig alerts, and they hit our recharge pipeline. It's a dry line right now because we're not taking water. And we are going to be taking water July 1st after the budget's approved, and right now our pipeline's been demolished in that section. So it was a gigantic hole, by 6 feet in diameter and maybe 12 feet down. And we have pictures of it. Our staff went out on site and we're working with their contact because they'll be responsible for making or paying for the repairs of it, not necessarily making the repairs.
Did they put the post in?
There is something,
Just like a foundational.
yeah, they moved it into a different area, but still didn't call dig alerts because we have distribution pipeline over there as well. So it's very frustrating.
The areas.
We're not terribly friendly is my understanding. And they did it, yeah, very close to Joshua trees that are existing there too. So we asked were their permits pulled and they just kind of ignored any of our inquiries. So it was a little bit of a
That
frustrating
needs to be a news
situation.
story, yeah.
So it's a subcontractor of Caltrans and it's about 3 different companies that were out there. They had an engineer, they had a surveyor, and then they had a contractor.
This is on BLT land, section 33, or where is it?
You know where the Joshua Tree sign is when you're coming in? It's
That's-
about 1,000 feet east of that sign off of the highway. If you drive by it, you'll see it.
So does Mojave Desert Land Trust know about this?
I don't know. This just happened. This is, you know, we should hear the do, this just is. It just happened last week. And we're addressing it with the contacts that we have. But it was for us very frustrating because they were not terribly kind and they didn't do their due diligence to our knowledge of calling in the dig alert. And they're supposed to call in a dig alert and we would go mark the area so that they wouldn't hit our facilities.
Can you say a billboard?
That's what I've been told. No, this
It
is
looks like a major.
major
way.
UA overpass kind of sign with
Huge
LED.
holes all the way
And it's
around.
huge. So if you go out there.
I think there's
you'll
3
see
of them
it.
in the basin. I think there's one on the other end of Yucca and one on the other end of 29 Palm.
That they're
From what I heard.
installing.
Yes.
Yeah, I've seen some.
You're lucky you weren't recharging at the time, you would have
Oh.
quickly gone total attraction.
It would have been right across the highway, so it's a big deal. So one more problem to solve. Multiple problems in one, just because it will be. So that happened last week. I'm not gonna go too much into the Sacramento visit, but it was an excellent visit. And the one thing I will say, when you go on CSD legislative days, if you go in the future, I do agree with Vice President Doolittle. They do give you a script and they make you pick who's your lead at the table and who's going to talk about which different items that you want to bring to the senators and to the assembly members. And it does feel frustrating a little bit because you want to talk about your own issues as well. But those issues are not just CSDA issues. They're issues from the districts that are represented by CSDA. So we're collectively giving them our voice. And then now we're going collectively to talk about the issues. And they were all fairly relevant, except for maybe one of them to us. The Clean Fleets one was for sure.
Director Johnsburg talked a lot.
She did, yeah. And then we got a good picture, so I was gonna ask Lisa to put that up for us. We got to meet Rosalie Ochoa Bo in person. And she was, I think, very amenable to understanding the needs. And I also got to meet her the week before last and did get to talk to her specifically about our district and the issues that we are having. And yeah, we are starting to get recognized. So it is important that we continue these efforts because we're starting, at least they're hearing us. There's no money. This problem, there's a major deficit and the earmarks that they typically get, they don't anticipate getting those this year because of the deficit. So if we really wanted to get in there and say we need, monies for certain projects, it's probably not going to happen this year. But we wanted to keep up those relationships. We learned a little bit about politics and relationships, and we definitely want to keep those going. So that was our group that went and talked to Rosalie Ochoa. Thank you, Lisa. And then last, what I'm going to end on is we missed it this year because we've been so busy and workshop being on different days than our regular meetings, but we don't want to forget the Public Servant Appreciation Week, which was the first week of May. Everybody that represents this district, our board members and staff alike, are all public servants, and appreciate the work. It takes a village, it takes everybody's efforts. So I do appreciate all the perspectives. I learn from every one of you all the time. So thank you. We don't have any blue cupcakes this year, maybe next year. And CSEA is also trying to get special districts recognized nationally, and they're making a lot of headway. And there'll be a special district week, hopefully federally recognized soon, and that's good for grants. If we're recognized as an entity the same way as a city or other government, then we'll have better opportunity for grant seeking. So that's good news too. Thank you.
Thank you. Future director meetings are noted on the file. And
I do have a question.
well, you look like you're gonna have some fun here. Go ahead.
Well, okay, I briefly asked it of Lisa, but there's this project that was brought in, again, unannounced pretty much to the Joshua community and unannounced to Joshua Water District and the Joshua Tree Resort. Have you seen the schematics of this project coming in, filling in at Sunset and Highway? And it's,
This is the One Tree Hill property.
yeah, I don't know if they call that anymore,
Okay.
but it's not. They've done extensive work already, and the end of comment was when I got home from Monterey at 5 p.m. Basically. End of comment.
Is that the one that has the billboards up on Highway 10?
No,
That's something about
this is not Lovemore. This is another project that it's a surprise to us. It wasn't announced to anybody, and you, Joshua Water District, didn't get notified either for 300 feet or for the fact that you're a agency that handles the water for this project. And I sent the email to you over the weekend. Not that, you were all around. So that's something to look at and concern.
May I say one thing? I did review yesterday the Joshua Tree Neighbors Group that has filed a lawsuit before the Superior Court regarding Lovemore. And many of the points that they made are related to the wastewater and what they're stating regarding the wastewater and flooding. So it's a very, very well prepared lawsuit.
Okay. Thank you.
Okay, so item 9 is a closed session. It's a conference with labor negotiators. We can do this under section 5.957.6 of the government code. Agency designated representatives are Sarah Johnson, general manager. She's representing the employees, all district employees. And we will reconvene here to adjourn the meeting, and I will have a copy of that government code section on the table if anybody wants to read it.
So you can go and pause the recording and
1, 2, 3, 4. All right, the regular meeting of the Joshua Basin, special meeting of the Joshua Basin Water District is back in session following a closed session where we met in conference regarding labor negotiations. There is no reportable action.
If it pleases the president, I would like to make a motion to adjourn this meeting.
I'll second.
This meeting is adjourned at 1 o'clock straight up.
Yeah, I heard that at NWA meeting. If